withdraw cash, go to a trading exchange house, and move the money. That still happens. But over time, you will see that connection with solutions like the one we're proposing actually don't be necessary. You don't need to pay the fees of withdrawing money from an ATM and then putting that money in an exchange house and sending money back to Indonesia or Philippines. You may actually go directly from your bank account or the companion card that you have or the prepaid card you have and send the remittance directly to the account, reducing also the friction, therefore the cost associated to those transactions. So those are the kind of solutions that are enabling. So for consumers, for migrants, they'll be very much dependent on what's enabled in every market. That's the first thing. In terms of gender, I mean, as I said before, most of this is family support. And there's some skew towards the males as primarily migrants in the family support. That being said, there are some cases where we believe electronic transactions on mobile technologies can enable and empower a significant percentage of the women population in different countries to do these transactions. Let me give you an example. Indonesian workers migrating to Middle East countries. So because of cultural reasons, religious reasons, many of these migrants, they are not allowed to leave their communities without a male companion. So in order to make this transaction, they go to find a cash outlet or remittance outlet that they can send money back home. They need to have a male companion, which not always is available or not always is easy to find. By enabling mobile transactions and delivering mobile solutions to these women working in Middle East countries, they can actually now make these transactions without that need, without having to leave the community and get in conflict with their with cultural issues or religious issues in this specific community. So we believe that technology actually can empower and can enable better solutions for all genders and for all segments of the population. The next question, which is about financial literacy, yes, truly it's clear that the next generation, the millennials, the less than 30 years old today are more, we say, digitally connected. I mean, they actually, I read a study says like, young adults between 18 to 24, they spend 18 hours a day connected to any kind of device. So that basically leaves 6 hours a day not connected. So, but, I mean, I'm not connected in 3 hours. So by default, they are more connected, they are more savvy in terms of how they manage digital solutions. That being said, many of the countries are enabling today mobile solutions. Whereas M-Pesa in Kenya, whereas mobile money in Bangladesh, or a number of solutions, they are reaching today all the segments of the population. The number of mobile consumers enabling, using these transactions, using mobile devices, is growing at an accelerated pace. That doesn't mean that they have to use the most sophisticated, leading-edge, last version of the iPhone 6. They probably are not. But mobile technology has different stages, and it's allowing consumers to transition from very basic, still electronic-driven solutions to more sophisticated solutions. And that's the natural path of consumers on how they're being educated and embraced in new technologies. Okay. So, yeah, in our case, yes. In this case, there was no issue on the FX because basically we're using the same FX. But actually, HomeSend doesn't have an issue on FX because many, as I said, one of the most important corridors actually sending remittances from Europe to M-Pesa in Kenya. Mm-hmm. Many of those transactions are coming in British pounds to M-Pesa in Kenya. So what we have is actually financial institutions in the middle doing that FX change. What we create in the model is we almost pass at a cost, or there's no cost to the FX. FX is really a commodity. It's basically a utility. What we define is that the sender actually put the price on what the fees that they want to send, so that makes it completely transparent. Mm-hmm. And the recipient end, who is responsible to deliver the transaction, gets a piece of that, gets a percentage of that fee that is being defined on the sending side. So transparency exists in the mean that the sender, migrant, will know at the very beginning what will be the net amount that will be received at the other party. And that transaction is actually in real time. By having multiple entities connected, you create competition. Therefore, you make this transparent also for the migrants and the consumers. So therefore, migrants can choose what's the best solution available for them. In many of the corridors, and I just came back from Middle East and Asia, we were discussing about the Philippines corridor, we were discussing about the Middle East corridor. Many of those corridors are very efficient in terms of, fixed fees, $5, any amount to send money from Middle East, UAE, Dubai to India. Very efficient. That's the amount of money. So
we have Sudhir Shetty from UAE sitting
so many of those markets are very efficient markets. Philippines, another very efficient market because of the amount of transactions that are going to market. So the learnings on those markets is that if you have significant flows and there's competition, at the end of the day, competition works. Exactly. Allows the entities that want to participate to provide the best available solution and to migrants and consumers to choose the best available solution. The problem is when you don't have transparency or when you don't have competition or when you don't allow multiple entities to offer to consumers. When you have those restrictions is when you create inefficiencies and friction to the migrants and the networks. So our goal is actually to eliminate and reduce the inefficiencies and the friction that cash creates because of the lack of transparency on those transactions.
Thank you. I have a series of questions I'm going to set because it was informal to different signals. So I have first, I'm one. Then I have John, who was second. Then we have Dilip, who was third. Then the chief economist, fourth. And then I have my Mexican colleague. Okay, so we're taking these 5. No other questions? I have not seen gender equality in the questions. Yeah, I know. No? Okay. Yes, I'm Paloma. 6. So we try to follow on this because it's a very interesting. So quickly, not comment, question directly. Yeah? So question only, no comment.
Okay. Thanks, Sonia. Yeah, thanks to the presenters for these very interesting presentations. This is Danny Noyek from UNDP. I understand that these new techniques and technologies enable us to send money quicker, to enable people to have bank accounts who didn't have them, so this is financial inclusion. The cost will drop. I would like to draw a connection to the session we have in the afternoon to diaspora savings and how these ways of financial inclusion can be linked to financial products. In the Philippines, for example, UNDP had the project of overseas Filipinos, Remittances for Development, the Pinoy Wise project, which is very good in combining remitting financial products and financial literacy training. So do you have already examples, or you foresee any examples how to work with the migrants' households, including the migrants, to come up with specific tools, instruments, financial instruments that link these diaspora contributions, these remittances to financial, to savings, for example, that take into account the power asymmetries, including the gender asymmetries and the powers between migrants and the households. And the next question: do you also think about financial inclusion of companies? A lot of companies and small micro enterprises are not included in the financial markets, and so is that something that you target specifically?
Yeah, thank you very much. John Bingham with the International Catholic Migration Commission, ICMC. We're a nonprofit civil society organization. Very happy to be here these days and in this conversation. Very much welcome business and the private sector more broadly on these migration development issues and the business approaches to this particular issue. The effort to develop better business models. There's good business to be done. It can be good business done in this. But I wonder if I can just maybe go a little bit to the devil's advocate side on this. So clearly, I think we probably all can agree there's more competition needed in this business for migrants and for the business itself, for the development uses of the remittances that are being sent and so on. But competition, all right, so there's competition in the banking business, and there's competition among credit card companies already, and yet we saw in the presentation that the perceptions of some of the businesses there to date are not that positive. From the civil society side, One of the issues that drives a lot of our migrant and diaspora colleagues and associations absolutely wild is the way that migrants and their earnings have been treated in the financial system and remittances. So again, devil's advocate, just curious, two questions. How low can you go, really, in some of the service charges and costs related to moving money around, as opposed to what regular consumers sometimes with banks and maybe even credit card companies see as hidden fees and creeping fees and so on? And second, and you really going, I think, to where Daniel was also connecting to yesterday's discussions, just curious, whenever we look at possible improvements and advances, whether it's in the financial system, as we're discussing here, or with big data or any data, as we discussed yesterday, one of the most important dynamics to assure that we're considering proper business and other models is to make sure the users are very directly involved in the design of the products and the systems. So the straightest question from civil society, if I might, is what migrants in diaspora of multiple levels, not just the most highly skilled and most professional, but what migrant and diaspora actors are involved in the design of your products directly as users, but in decision-making processes and kind of standards and quality assurance, ethical questions and standards. Thanks.
Philip.
If it is okay with you, I'll mention a bit about the presentation that Miriam was going to make. Just 1 minute. Yeah. Well, I think Pietro from STC from Switzerland also mentioned about the presentation that Miriam was going to make. Miriam from the Philips International, and I just wanted to give you a sense of what that is about. There is a working group on facilitating healthcare and health insurance by leveraging remittances and diaspora resources. That's the sort of working title of the program. And we are sort of in the initial stages of, we have had several rounds of discussions on the topic of how we can collaborate with Philips International, with European Commission, with Swiss Development Agency for Development and Cooperation, and the World Bank, and perhaps the newly created African Institute for Remittances in Nairobi, and perhaps bring in some other players as well. And the idea, I think, came from a very simple point, and probably the basis was probably a blog that I wrote a while ago about the role of health insurance, micro health insurance for poor people. It is almost certain that a poor person, a poor head of household in a rural community, let's say in an underdeveloped part of the world in Africa or in my part of the world in India, almost certain that in the 20 years of adult life, the head of the household is going to have literally a back-breaking kind of health incidents. What that means is the person has really a back problem or has an accident or has some kind of a problem, and that person is not able to get up and go to work. And all the assets that the family had accumulated by that time, they try to use that asset to mobilize the funding that would be required for hospitalization and surgery of that person. And typically, the person never recovers, and they are back to the beginning of the cycle of poverty again 20 years later. So often the migrant then gets a call, hey, so-and-so has this incident, requires $1,000, $2,000, $500. It is as little as that. And that kind of an insurance, if you already had that sort of insurance available for those households, the premiums on that would be so small on a monthly basis that someone like I probably would be willing to buy insurance for 20, 30, or 100 people on a regular basis if such a facility was there and if it was easy to implement. So that is the genesis of that thinking, and that is part of the sort of the third item of the remittance agenda that I always talk about, remittances and financial inclusion. We talked about two very important components here on how financial inclusion can incorporate remittances, and I think we ought to think about also micro insurance, including micro health life insurance as well. There was an experiment, I think Western Union had started, about ensuring remittances, continuity of remittances for 24 months or 12 months forward if the sender passes away or has some sort of an issue and is not able to send money. So there was an experiment in the 2004-2006 period, and that has stopped. There was another interesting insurance that I think Honda talked about, Honda car company. They call it car remittances. They kind of dropped one R, car remittances. That's how they would say it. The idea was to buy a car remittance. The migrant can buy it. That also has stopped. And then there is the whole issue of linking remittances to mortgages and buying houses. That is kind of continuing in some ways, but it hasn't really taken off in many ways because of the KYC regulations and the Patriot Act. And there was also a plan by, I'm now moving away from the topic of Philips, but just to quickly tell you about this plan of Pemex. Pemex, the cement company, used to have a micro-saving program where a Mexican migrant would contribute on a monthly basis through the remittance channel to a saving program. And then at some point when there is enough money, they would build a room. When they have further some amount of money, they would build a bathroom. And that program also was touted big time in the early 2000s. I don't know where it stands, but there is already a precedence on that. So these are some of the ideas that would complement what Max and Jerry have mentioned here. I thought I would just mention that because Miriam wasn't there. Thank you.
Thank you, Dilip. And then have Chief Economist.
I have two questions. One is financial inclusion to Jerry and number of banks. And another question is financial leverage for the migrant families. Number one is that usually it is thought that if number of banks goes up, then it represents higher level of financial inclusion. Well, in Bangladesh, I'm sharing the Bangladesh experience that, yes, financial inclusion is rising day by day, but that is not for the number of banks because the more and more banks are coming into the market and they are concentrated in the metropolitan areas. However, the previous public sector banks are instructed to do financial inclusion, like our governor instructed them to open bank accounts for 10 taka. 10 taka is just like maybe 1 cent, something like that. So it's a token amount. So it is instruction or policy driven financial inclusion. But more and more banks are coming into the market. So is there any like banking hump model? Usually when a country is developing, gradually competition is rising and there is more mergers among banks and we get big players of bank. But that is not the case of Bangladesh. We have multiple banks growing, they are mushrooming in numbers. So what is your interpretation in that case? Second question is financial leverage. I was thinking that can MasterCard think of any kind of financial leverage for the migrant families so that they can have a credit card for some kind of room? What is their monthly remittance? Because sometimes the money is not coming. Then the family suffers a lot for fulfilling their basic needs. So they can have some kind of by default, they can get some kind of credit card by which they have some kind of leeway for spending. And if you think about that, we can implement that in the Bangladesh model. Thank you.
Thank you. And we're also thankful for the presentations. They're great, and we'd like to have a lot more discussions on this, but I guess two quick questions. One's primarily for Jerry in terms of how do people get money into the system itself if coming from Mexico, and then obviously when they're taking it out. And the other one goes to, I guess, both of you, is if you looking at, I think Jerry started some of his presentation talking a little bit about the behavior of the people, and how have you seen, or can you share any information about how much money is it left behind on these payment systems? You both talked about these as a channel to get money across from borders, but then have you seen any behavior on how much money is really left behind as a savings mechanism itself?
Thank you. So we have 6 questions. Now we do the reverse. Will be Max first, and then Jerry.
Forget anyone. And some of the questions actually are connected. So let me try to start building the connections so we can actually articulate this in a better dialogue. So the last question actually is connected also to savings. So this is an early stage of enabling electronics for remittances. What we have seen so far is that most of the funds that are being transferred are being withdrawn. So they don't leave any amounts, even though this is in an electronic payment tool, meaning a prepaid or debit card. They don't actually, basically, they withdraw most actually all the funds in the card. Explanation for that. One, because as I said before, most of this is actually family support. So that actually is very much correlated to the segment of the population. So most of the funds, it's the belief, are already committed. So when they arrive, already have been used to pay rent, to pay bills, to pay a number of things. So not much there. That's one. The second one is trust. Because, for many of these segments of the population, cash is real. Today, cash is still real. This electronic transaction is a mean when I can use it and have some limitations where I can use it. So as we evolve that, as we make this more, there's more trust in electronic payments and there's more acceptance on the use of electronic payments, then we should be able, I believe, to start seeing where there's an opportunity for savings or addressing transaction processing. But if you believe that most of these families in the receiving ends actually are in great need of those funds, there's not much that you can actually leave in the table as, as a savings or for a nation, in many cases. But it's early stage, so very difficult to address whether that is true or not. There was another question associated to true savings or costs or efficiencies in the network, where they can be created, how low the cost of the remittance can go, and all these things. So I believe electronic payments and I believe electronic transactions can help us enable some of that. What will be the limit, I think, is depending on 2 major things. And I think there are 2 components on what I share today that will influence that, and we'll see where it can go. One is the ability to enable social benefits and other disbursements into the same mechanisms and the same tools. Why? Because that creates the scale to reduce the fixed cost or the utilization of the fixed cost of the infrastructure. So if you have most of the disbursements today, most of the social benefits today are cash-based, and there's significant inefficiencies on those deliveries. Because even if you want to say, I want to make the social benefit program for healthcare or for transportation or for education, if you deliver cash, those funds are fungible. So you can use that for anything, not necessarily for the intended purpose. That's one thing. If you use electronic payments, actually you can address that in a very fine way and say, look, these funds can only be used for healthcare. And actually we create a solution using chip technology for cards in a given country where consumers actually were receiving this money, they can only use those cards in these hospitals or pharmacies to use those cards. By the way, when they go to it's in YouTube, you will find it, but when you actually go to one of the hospitals, you also bring your history. So that was part of the information that you can put together in the technology. So you can do some of those things. But so disbursements, because of the size of the flow, which are much larger or more relevant in volumes than even remittances, can help to generate that scale so the participants in the value chain now have a reason to participate and say, okay, I'm willing to take a lower cost because it's not about just this 1 month remittance, it's about all these flows that may come in my way. That's one. The second component is one of the major competitive advantages or how competitive barriers that MTOs created over time was the size of the distribution channel. So if my distribution channel, meaning my sending side and my recipient end is large, and the largest one have, I think, 500 or 600,000 outlets globally between sending and receiving, I'm a more relevant network because that basically means that my migrants, my consumers, can reach me in more places. And it's more convenient, it's easy to use, it's open next to their door, where they work, where they live. That was the major. So if you believe that any new player has to build a similar infrastructure and connections to be able to compete, then where there's cost and inefficiency is created. If you create a hub and spoke model, as we attempt to create, or actually we are creating today, what you do is actually you leverage the infrastructure from different places. So in the case of my example for M-Pesa in Kenya, M-Pesa already have the outlets to deliver money in Kenya. The sending parties in UK, Europe, or other places, they don't have to build that receiving outlet. They all have to focus on the sending outlet. So the friction, the shared infrastructure will help or should help to reduce some of those fixed costs on enabling transactions rather than multiplying and overlapping or creating redundancy on the network. To what degree or to what point that cost can be reduced, I don't know. I think it's too early to take a position and say, look, I venture this will be the number. I think economics has to be delivered by real and fundamental changes in the business models or the infrastructure associated to that. And electronics, sharing infrastructure are real savings. Okay? Leverage. So, difficult, because to my point before, to begin with, the credit has to be given by a financial institution. So one of the key things for financial institutions addressing migrants is knowledge. Is how I know the flows of these migrants. So I need to have recurrency, and that will be built over time. So it's not impossible, it's early stage. We actually help in Latin America build scorings for SMEs and micro merchants. And we did that based on flows. And actually you say, okay, how we can create scores so financial institutions in Latin America can start granting credit lines. And this is a pilot that we started like, I think 5 years ago, 6 years ago probably. And there's some interesting results around that. So some financial institutions were using that information on the flows, on the payments flows, because payments is a flow. You can say, okay, this is the working flows on these small merchants and micro merchants in terms of creating potential credit lines. We're also creating another line, which is how we can use debit cards for small financial institutions or small merchants or micro merchants to actually get access to credit lines based on their flows. But there's some recurrency. So there's frequency. Therefore, financial institutions become more comfortable assessing that information and saying, I can understand how this behaves. I can understand patterns. Therefore, I can grant credit lines. In the case of remittances, can we use remittances to do that or something similar to consumers? I would say yes, over time. I think we don't have enough information today to say, okay, what's the pattern? How remittances behave? What's the frequency? Are they using the same channels or they will change channels over time? So that's kind of information that we need to gather in order to create those capabilities. So not impossible, I think just it's early stage. Okay. Do I miss any question?
I think for the time being, yes, we covered everything. No, Jerry.
Okay, we'll start out with questions on crowdsourcing and bill pays. Again, we started this with involving the crowd and getting the feedback from them and getting real-life stories of this is how it really works. And what we heard was literally thousands and thousands of times, I don't have the willpower to save. I've tried and I've tried and I've tried and it doesn't work. And that's why they've been using these ROSCAs for centuries, because they don't have the willpower to do it. So we designed our system with that as a basis so that they're forced to save. So when the social boost comes in, half of that flows into the ROSCA side of the design, and it's the money is locked up, so they can't get to it. As far as the ability to the sender to have some control over how the money's spent, again, many stories about, I send money to my mom or dad, and my dad doesn't, he doesn't take care of himself. The money goes for this, or he gives it to somebody. Or our system has the ability for the sender to actually, through auto pay and what have you, to pay the utilities, to do things like that, so that they have control over how the money's actually spent. So, again, as opposed to us designing it and not understanding what's really going on, we approached them in the opposite direction, and they provided the solutions. And then on the cost, how low can it go? Well, the two main components of banks, their two biggest cost structures are marketing, customer acquisition, and the brick and mortar, supporting brick and mortar. You take those two things out of the equation, you take almost a big portion of the cost out, and that's what we've done. When you look at, and that's what banks are really struggling with, is customer acquisition costs. An example would be in the U.S. alone, the bank spent $19 billion last year in traditional marketing, and they're losing market share. They're trading customers back and forth. So we remove that, and it allows the banks then to take that money that they had been spending and pay it back to customers. In that we are a bundled service, and that the banks can hold the deposits. The banks can make the money off the deposits as opposed to making the money off the customer. So to answer your question, and an example would be the remittance. The bank doesn't have to make any money on the remittance. The bank's making money in other places. So when you bundle it together, it actually, and if you have a customer that's willing to go out and help source other customers, the customer not only can get free banking, the customer can actually get banking that pays them money. So the answer to your question is it can go below zero. And I know that's hard to get your head around, but I'd be more than happy to sit down and show you the math of how that actually works, and it does work. We had a question about the crowdsourcing. Again, as we talked about, that's how we started. I was involved with a lot of that to begin with, and it's something that stuck with me. I travel around the globe continuously, and every taxi I get into, the first questions I ask are the set of questions that we asked in the crowdsourcing phase. Ask them, if they have bank accounts, if they do have them, how many they have, how they transfer money, and get real life stories. An example of that would be in India recently, 3 different taxi drivers. All of them had signed up for the new government accounts, and when I asked them why, they said, because I heard that they were going to put money in there. And I asked them, have you used the accounts? No. Have you put any money in the accounts? No. But I signed up because someone said that there was some payment coming out of Switzerland and we were all going to get a part of it. So what this tells me is you have, and you're starting to see some of that information now in the press. You've signed up hundreds of millions of people, but a very low percentage of those people are using those accounts. And the people that are using them as cash grab points. As soon as the money hits in there, they go get it all out, and they go out and spend it in cash. And again, what we've designed is something that incentivizes them to actually use the accounts the way that they're meant to be used. And once they start doing that and realize it's more convenient than using cash, they will get over the hump. But you got to have something to incentivize them to get there first. And that's not picking on India. That's not specific to. We see the same thing in Mexico, where you have a large number of people now that are getting paid electronically. But first thing they do is they go to the ATM and they get all their money out. If they can't get it in one, they'll come back the next day and get the rest of it out, and then they go out and pay in cash. That doesn't really help. I mean, it's a start, but it doesn't really help. On the banks, part of the equation is more banks. You're correct, but that's only part of the equation. The problem you have is, and what we discovered is that banks don't get along very well with each other. And banks like to gig each other. Banks like, I'll charge more fee. Well, you're going to charge for me, I'll charge more. And you have all these fingers in the pie that are fighting over it. And at the end of the day, you know who pays for that? It's not the banks. It gets passed on to the customer. So what we've created is a set of network rules that our member banks operate under it's a very low fee structure. So why should I be charging you and you turn around charging me and back and forth and let's do this? Let's agree on a base set of rules here. An example would be in the money transfer, we don't need to be charging each other for that. Why? And then we can pass that on. We can make our money through the deposits in other places. It's about, if we don't capture these customers and get something out of it, someone else is going to. An Alibaba, a Tencent, or some of these other competitors are coming out there. So it's creating this new model, and that's where we drive the cost down. And then for Mexico on the cash in, cash out strategies, again, because of our unique model and the social boost and the corporate members, the way we're working, you still have the same channels you normally would with banks. You'd have the ATM networks and what have you. But in addition, you'll have OXXO, 7-Eleven, and we have something to offer them that the competitors don't have to become involved. And so the cash in, cash out points will be there.
Thank you. I think that has been a very, very nice Paloma, the last
very quick comment already. Yeah. Jerry already answered me. Well, thank you to you, because I think the main difference of this panel is you have this vision of building a global product for both of cases. So you are kind of competitors. And I'm a firm believer of alliances, of creating partnership, but this is very hard and very difficult. So
just to be clear, we're not competitors. We're actually working with all the partners.
Well, not competitor, but you're offering a service and
Because their cards are part of the system.
well, even better. You're not competitors, you can work together, so it's even better. So how is the process? So, one of the main barriers is everybody's working on his own. Nobody's working together like a whole process. So how is the process of identifying partners and doing, I know it's a very hard question. Are you working better with a government, and also, Jerry, you're only working with financial institutions, so for instance, microfinance institutions, these kind of players are also in your potential partner, or just financial institutions?
Currently, we're just working with banks. We're very mindful of the anti-money laundering and some of the things that we can get into. We're a new company. We don't want to get derailed before we actually get, as we get larger, we'll have more ability to do some additional things, but currently we're just working with. And to answer your question, the hardest part of this is putting the partners together, because these are competitors in a lot of cases, and they don't get along well together. So it's very similar to what Visa and MasterCard have done in the past. They've sit in the middle and said, we're going to set a set of rules for the network, and everyone's going to join it and work under these rules, because you can't get along. You can't work together. So we're going to sit in the center, agnostic, and run this. And that's what we're doing in a different manner. Again, having all the other people. And really a big part of this is it's not just the member banks, it's also these corporate members, because these are entities that touch millions, tens of millions, hundreds of millions of people, and to have them involved in that they're much more efficient being the marketing front for the bank than the bank is itself, and it saves the bank that cost. So that's the magic of this, is putting that ecosystem together.
He wants Max, the last word, Max.
No, yes. I wanted to address your question. So it's difficult. So, getting a significant number of institutions, the different nature get together is very difficult. One of the things that we actually create, and this is a difference actually from our thinking of our network in credit cards or debit cards. In debit cards and credit cards, as been said, we establish the same rules everywhere. So, wherever you go with your MasterCard card, the card will work. It doesn't matter where the card is from, the merchant is. It will work. In this environment, for this construction, we change some of those criteria. And actually, we allow the creation of bilaterals among the parties. So we gave kind of a set of standard rules that you can comply with, minimum rules, and by default pricing, by default connectivity. So by default, you can connect to everybody, and by default, you can use our suggested pricing for the connections in corridors. But if two parties that are connected, they say, we want to have these different economics or different terms and conditions, we enable that. So the intelligence in the network allow us to set up actually bilaterals. And in some cases, because of stage of competition, that's reality, some entities doesn't want to connect with other entities. So we actually allow that. We allow some entities to say, from all your list of connections, countries and parties, we only want to connect to these ones and not to the other ones. And that's fine. We believe that over time, as the business makes sense, people will start enabling and expanding that. And that's not different how, if you track history on banking, how ATM networks were created. The ATM networks were created around banks that they didn't allow other people to use their own network because they believed was a competitive barrier. Over time, it became a utility. So it's the same case. That's how we created. Okay.
Thank you very much. It has been a very good session. I think that this can pass for the drafting of the zero. The key message: competition, increasing competition, interoperability, new technology, and how much the reduction of the cost can be done. It's very important. We have products, and in financial inclusion, we can see that really in the market there are products that are developing for microinsurance, for the financing. We didn't discuss also on the mortgage, also but the pension funds. So I think that it has been a very rich, a great applause for the two presenters. It was excellent. Another?
For you.
For me?
Yeah.
Oh.
So just on the process, because as somebody mentioned, that the negotiations are actually happening in the room next door, and some of us are aware of the FFD process. So the outcome of this not just this session, but the entire event, I mean, what happens to that? I mean, I think you had previously mentioned that there will be a report, or I mean, would you look for some more feedback from the private sector? I think that's an important part of the process.
You want? Pietro, do you want to answer that?
Well, you're putting me a little bit on the spot right here. Well, I mean, there's certainly going to be an official report by the conference organizers, but I think it's certainly also to the many different stakeholders involved in this conference to really take back home ideas, suggestions, inspirations as from the panel of this morning, and to quickly wave it into the official policy making back at capitals, but also civil society, international organizations who are involved in the Addis conference, and then also the summit in September. So I think it's also really an individual task of each of us to really draw the best out of these conferences and bring it back home and integrate this thinking into our process. Addis is coming very quickly. I mean, we are just rounding up now a couple of weeks, and then the document will hopefully be concluded. But I think there is a long way in implementing the Addis Accord. There's a long discussion about what does it mean with regard to remittances, about achieving the target of 3% and no corridor above 5%. Financial inclusion. So I think this is an ongoing debate, but really I think it's a task to the organizers to give us some instruments, but it's also an individual responsibility to make the best out of such presentations that we had this morning.
Pietro, yes.
We will prepare the proceedings. We will distribute to all the
governments and the negotiators. All the governments and negotiators. And we are going to the G20 meeting also, where we're going to present some of these findings, and then we're going to put it also we're going to organize a side event in July in Ethiopia also to present this. Thank you. Well, we have a 10 minutes.
Just to mention.
Sorry.
Yeah.
Yeah, this is web streaming right now. A lot of people in Peru at web streaming. I put it an announcement, but there's a web streaming all over. All our colleagues in other UN agencies and different governments who have not been able to attend, they're looking at this. Just to close, we have 10 minutes break to get coffee, and we have a second very interesting session, also very well moderators in the next session. So we look forward to that. Thank you. Muchísimas gracias.
Thank you very much for coming.
I didn't get a chance to say all those. Well, I enjoyed yours too. No, I enjoyed yours very much too. No, philanthropy. I wondered if one very quick point that sort of you were presenting as a lot of your presentation. On the issue of qualification contracts are in one of the ones that comes up is what happens with those laws get together out of these discussions. Thinking my daughter was a student at Bristol for a while. She was a well, she transferred back from just postgraduate at Oxford. It was mental. listening to are the courts fair? No, as a thesis, yes. Maybe paper doing something else and now she's got to go on. Yeah, there's one criminologist in Oxford. He was more into the police than the courts. Get back into it, yeah. Yeah. She spent her whole life wanting to get into development NGOs and started off with started working on salaries that they would pay and she couldn't afford what they wanted. One of my oldest friends in the world, he's come on part-time, is driver on the London Road. His daughter got first in-law company, joined it UNHCR, and they paid her nothing for 2 years. He had to support her. And then 2 years they ended with that. I was going to get a quick coffee and then I have to leave for the airport, unfortunately, but the one to stay away, so I'm going to go there. No, you weren't, not at all. I loved you too.
So how are you this morning?
Oh, I'm struggling to finish my work.
Your speech?
Too excited. Thank you.
What time are you going to finish?
Oh no, I'll finish one task and then I'll do the other one.
Oh, Lord.
Thanks.
Ladies and gentlemen, hello. What else am I supposed to do? Hello? Is it working?
Hello, hello.
Oh, it is. Thank you. Hello, everybody. Hello, everybody. How comes when Hello, everybody. Welcome back to our session number 6, on a classy subject. The classy subject about reducing costs of remittances. And I hope the subject is classy, but I hope the solutions and the issues we will talk about are avant-garde. And what exactly we want to look into in this session is the issue of remittances costs and giving the word to the remittances industry, looking into commercial challenges, but also looking into regulatory barriers to reduce costs. What exactly we want to do is, what are recent developments in the remittances industry in terms of, first of all, how do new markets look like? Second, what do new products look like? And what are the opportunities that stem from there? Secondly, we also want to have a look at how are regulations on the sending as well as on the receiving side affecting the costs of operating in the remittances market. And third, what is the way forward in terms of regulatory changes and technological innovation to facilitate remittances services for the poor? As I said, we want to give the word to representatives from remittances industry. We'll have some commercial, the opportunity to do some commercial break here. But I can tell you it's worth it, and it's worth listening to the colleagues on the panel. Who do we have on the panel? We have a mixture of different service providers in the field of money transfer. And the mix is particularly interesting because we have one representative from an organization which has already a longer history, and other representatives with not such a long history, but a lot of energy about coming over with new, innovative approaches. So be prepared for Mr. Sudhir Kumar Shetty, from the president of UAE Exchange. Mr. Rajesh Agrawal, CEO and founder of SendPay from London, and Mrs. Lucille Paysan, she's CMO at AfriMarket based in France. We start with Sudhir Kumar Shetty. Please have your word.
Before I start the slides, let me give a brief background of the UAE exchange, how it operated, and how we are able to manage to bring down the cost of remittance to almost 2%, which is operating for the last 35 years in the UAE market. The company has its operation in 32 countries now. We have about close to 800 branches, retail branches in these countries, and last year alone, UAE Exchange has remitted $28 billion of remittances. Now, the founder, I need to talk about Dr. B.R. Shetty. The first business for the group was medical services to the migrant workers, because it was not easy in this country to have the medical services for the low-paid workers. It was very expensive. They could not afford. So that's the time the hospital business started in 1975, providing medical services to the migrant workers. Later on, there was an opportunity because these people who were migrating to the Gulf countries because of the oil boom, were not having proper channels to remit money back home. The banks were not really interested in handling these transactions, and they were not available for these workers when they were free to do a transaction. So there, Dr. Shetty saw the opportunity to start money remittance service. I'll just give you a brief rundown on how in the Africa region the cost of remittance is so high that yesterday Dilip was mentioning that this will ultimately save almost up to $20 billion of money going to the hands of the migrant workers and their families. The remittance and its fee, we have, of course, the figures indicate that 230 million migrants sending about $435 billion of remittances to 2014 figures. 7.8% is the current global average, but I think we have certain countries where it is going as high as 14 to 15%. The G20 countries and the World Bank target 5x5 initiative. UAE's remittance fee is the lowest in the world now. It is around 2%. Now, if you see the remittance flows to the two major markets in Africa, Kenya and Nigeria, and how these remittances are being used, we see the larger portion in Nigeria is for the land purchase, education, and business, whereas in Kenya it is for food and house construction, health, and house rebuilding and rent payments. The remittance to super tax, 2.3 billion lost to Africa because of the high remittance cost, which is around 14%. Example, for a $200 remittance, it is costing about $25. And the average percentage of cost of transferring $200 by the type of remittance. Now, banks are charging the highest, and in some countries, the money transfer operators are also charging as high as 14%. Now, how we were able to reduce the cost per transaction to 2%? We were one of the early adopters of technology. Of course, the initial stages, we were having only checks that were drawn on various current accounts of correspondent banks that we were maintaining. The customers had to carry these checks to the post office, and then they had to send it by registered mail to their beneficiaries. One was the cost, additional cost, plus the time it used to take. It used to take almost 3 weeks for the checks to be received by the families back in their countries. Now, we saw an opportunity very early in the 1980s. As I said, Dr. Shetty started this money remittance business because the Gulf countries were receiving more number of migrant workers, especially from South Asia, Southeast Asia. And because of that, the medical service was started in 1975. Later, 1980, we started the remittance service through UA Exchange. Except the banks, there weren't many formal money remittance channels available out of the Gulf region, and most low-earning migrants were unbanked. And the bank's infrastructure wasn't good, and working hours were not favorable. As I said, when the people were free to remit money, because they were all working in far-flung construction sites, they could come to the city only by 6 in the evening. Banks were not available. Or they were coming only during the weekends, the banks were not available. That's where we started our operation and started opening the UA Exchange branches from 8 a.m. to 10 p.m. and all 7 days of the week. So the people started coming to the exchange branches, and we encouraged these people to open bank accounts in their home countries. The shift, the UA Exchange encouraged migrants to choose formal means for sending money. This brought Forex into the receiving economy's treasury. Many of the South Asian countries, because of the informal channels, they were losing the foreign exchange. Now, because we started opening bank accounts for the migrant workers back in their home countries, the channels provided which encouraged formal remittances into these bank accounts. Expanded bank branch network to improve customer proximity. extended working hours. Now, the journey, as I mentioned, we were issuing only checks drawn on correspondent banks in various currencies. Now, we first started off with our own IT development team within the company. And we started seeing how the technology could help us in eliminating the delay in delivering the money transfer. Now, 1996, we started downloading the data in the destination countries and started printing the checks in those countries. Instead of printing the checks in the remitting country and then the customer going to the post office to send it back to their home countries, we started downloading the data and generating the instrument in the home countries. So this reduced the time frame from 21 days, 25 days to 3 days. Why the informal channel was flourishing those days was they were very fast, because somebody would collect the local currency in the countries and they will deliver the local currency in the home countries. We had to beat those people in terms of speed. And then they were more cheaper compared to the interbank rates that we are offering. So first we wanted to reduce the time taken to put the instrument across. 1996 we started downloading the data and generating the instrument in the home countries. Then we got into SWIFT. So because of the SWIFT, we could get the access to almost all the banks worldwide. And UAE started attracting people from different parts of the world. Today we have 200 different nationalities living and working in UAE. We have 8 million population, out of which almost 7 million are expatriates. And this really helped us in putting the money across to even to the developed economies. Now, 1998, we started instant money product. We were the agents for Western Union, and we knew that the Western Union charges were very, very high. So we developed our own instant cash product called Express Money and brought down the transaction fee from $20 minimum to $4 for any transaction. Now, 2009, Max was mentioning, we got the MasterCard tie-up, and we are the only principal members for MasterCard among the money transfer companies. Now, what did we do? With MasterCard, we launched a card where the worker's salary could be loaded onto the card. And he could go to any ATM and draw cash, or we put up our own cash dispensing machines from where the salaries can be drawn. Now, how this card got introduced in the UAE was the workers were being paid in cash. And most of the companies, they did not pay the salary for months together. 3-4 months, the workers did not get the salary. Then finally 1 month they will give, after the 4 months, they'll give 1 month salary. And the salary or the wages given to the workers were not in conformity with the contracts the companies had signed. So the ministry was receiving a lot of complaints that the salaries or the wages were not being paid on time, and it was not in conformity with the contracts. So the Ministry of Labor got interested, and then they said we would ask the exchange companies or the banks to disburse the salaries on behalf of the companies. And this program is really something which all the other countries are looking at, because this enabled the workers to receive the salary or the wages on time and in conformity with the contracts. So the data or the information about the salary disbursal goes to the central bank of the country and the ministry real time. Now, along with this, we also launched a multi-currency travel card with the MasterCard platform, where the foreign currency or the people who travel, earlier they used to carry cash. Now they can carry this card, and when we load this card, exactly it is like a remittance. The card can be loaded, and the customer can go and take that card to any country that he wishes, and the customer can choose the number of currencies that he wants to load in this card. Now, apart from this, we also got into the standalone ATMs, where the customer need not come to the branch location. They can go to the ATM. They are all registered customers, and they can do a transaction on their own. In 2010, we launched Flash Remit, which is host-to-host connectivity with the correspondent bank. Now, by this, we were able to push the transaction directly to the customer's bank account, and it happened instantaneously. Within a minute, the customer could get the confirmation back in his mobile phone as an SMS alert, saying that thank you for using the service, your account has been credited. And this happens 7 days a week, 24 hours a day. Now, because of this, we are able to really offer the products at a very cheap price. Now, Max mentioned that in the UAE market, we offer all the remittances, regardless of the amount, for as low as $4. Now, we also started moving to the mobile apps and online remittance. We also have a portal called moneytoanywhere.com, where the registered customers can log on and do a transaction. Now, the flash remit is instant bank transfer. It is faster than the instant cash because it works 24 hours a day and 7 days a week. And even on a public holiday, the customer's account can be credited. Now, this is about the mobile apps and the moneytoanywhere.com, and people have moved from the traditional brick and mortar transfer to the online transfers wherever possible. In certain countries, it is not still active because we don't have a direct debit facility happening. The mobile apps is slowly catching up in the Middle Eastern market, but in the other markets, now markets like US, Europe, and Australia, we are able to generate almost 35% of the total transactions through the mobile. Now, this is the Smart Pay I was talking about, the technology-driven MasterCard-powered facility within online salary loading facility and electronic payroll cards. Now, this is cash mode to card mode. These workers were paid always in cash. Now, all this cash is loaded onto the card. And from the card, they can use that card to do an online remittance transaction. Now, of course, the UAE exchange follows the EFQM, European Foundation for Quality Management, a lot of certifications in terms of security certifications and quality certifications, awards. Yeah. Now, apart from doing remittances, we continuously educate our customers to open bank accounts. Now, over the last 35 years of our history, we have opened more than 4 million bank accounts, and in the last 4 years, we have opened more than 1 million bank accounts for the customers. Now, in the previous session, they were mentioning about the Indian Prime Minister's Jan Dhan Yojana, where every family should have an account. He was mentioning that everybody has an account, but nobody is using the account. Now, this account has certain benefits because to encourage the account opening, the government announced that everybody will be given a free insurance and a small facility of 5,000 rupees, which is very small, but just to encourage people to open bank account. Now, if all the people in the receive countries have their bank accounts in place, I think this is where we can really manage the costs. Because you don't have a service provider, a receive agent, and a paying agent where you need to share the revenue. Here we are pushing the transaction directly into the bank account. This is, because of that, the cost of operation has become so low. So we are able to offer at such a low price. Of course, apart from doing this, we've in our markets, we had post-2008, a lot of people got into, financial problems, and we went out to all these places where these people are housed in the camps, and we started counseling them, how to judiciously use their money and not to get into debt trap. And these are all some of the community services. We go to the labor camps and also provide them some entertainment, show some films, arrange some competitions, because they are away from their families, and socially they are not somebody is not taking care of their requirements. So we go out and do all these sorts of things so that we build a relationship with those people, and they have the element of trust in the company. Now, we also join hands with UNICEF and United Nations for food program, and we are contributing to all these. In fact, in the recent Nepal tragedy, we were the first one to offer free remittances to Nepal. Not only to the Prime Minister's Relief Fund, but also we said we will offer free remittance to the families. And the group, because we have the pharmaceutical manufacturing unit as well as medical services, we sent about, I think, some tons of medicines to Nepal. Now, UA Exchange, at a glance, we have now 7.9 million customers worldwide, contributes 6% of the global remittance volume. Last year, we remitted $28 billion. Correspondent relations with more than 150 banks worldwide, and servicing over 400,000 customers every day. We are in 31 countries, 750 direct offices, and recently we acquired the Travelex global operations. So Travelex is part of our group now. And New Horizons, of course, mobile money transfers. MoneyBeNet is one of the connectivities that agents can have and use our technology and the network. Yeah, our quest to reduce remittance cost will be successful only with the active participation from service providers, technological innovators, respective regulators, and the governments. I must say that now the biggest challenge is the banks are not very happy to maintain accounts for the money transfer companies. And this is putting the money transfer companies into trouble, and thereby pushing the remitters to the informal channels, because if the money transfer companies do not operate, then the customers are not going to go to the banks to do the transactions. Rather, they will go to the informal channels. It is imperative that the banks realize this, and the regulators also realize this. And if the money transfer companies do not have a mechanism to settle their requirements through the banks, settlement banks, then the settlement to various countries will not happen. So it is very critical that the settlement bankers and the correspondent banks and the regulators look at this industry from the angle of the service to the humanity, because the banks can cite the reason that this is not becoming viable for us to maintain the accounts with the money transfer companies because of the KYC compliance issues. But companies like ours, we take care of the KYC to the maximum extent, and the guidelines and the regulations that we follow is very similar to what the banks follow when they start the relationship with the customer. I think I will close here and maybe take up questions later on. Thank you.
Thank you very much, Mr. Shetty. I'm wondering whether you're discontent with the banks. Finally, is it a regulatory issue or is it a commercial one? But we'll have that for the discussion later on. And we proceed with Rajesh Agrawal from SendPay, please.
Thank you very much, Peter. And first of all, can I say thank you very much to the World Bank and to the United Nations. Special thanks to Dilip and Sonia for organizing this. What a fantastic gathering of audience here. And for such an important cause as well. And we are here in this room because we are all very concerned about the migration and the cost of remittances. Not many people outside this room actually understand the severity of the problem and how big the remittance industry is and how much the cost is, and because of which a lot of small countries are suffering because less money is being received in many countries. Many people have highlighted the problem, including former Secretary General Kofi Annan. He's highlighted this, that less money is being received in a lot of countries, including Africa. And there have been a lot of promises and a lot of things and a lot of research papers have been published on the matter, but very little has actually been done about it. There has been some reduction in the cost in the last few years, but a lot more needs to be done. So we are doing our own bit through ZenPay. I think it would be interesting to tell you a little bit about my own background. I come from a small town in central India, which is where I was born and brought up. in a very humble sort of background. My mother was a school teacher. My father was a government worker. He used to work on the dams for the irrigation purposes. And that's where I was born and brought up. So very cost-conscious, value, you really valued the money and you understand the value of money. That is the kind of background I came from. And then after finishing the studies, I moved to England, migrated there in 2001. And in 2005, I set up a business called Rational FX. Rational FX was basically a money transfer operation, but for small businesses only. So if you are a small business, for instance, based in the UK, you are importing goods from China, you need to pay your invoices in US dollars. And banks, we have done enough bank bashing in the last 2 days. But banks being banks are very expensive. So we sort of started undercutting the banks. And we did very well. I mean, now we work with about 6,000 businesses across Western Europe. And this year we'll be handling about $3 billion in payments for small businesses. But I used to get a lot of my friends saying to me, Rajesh, I need to send 200 pounds to India. Can you help? I know you give very good exchange rate to business customers. And then I thought, yeah, maybe it makes sense. So we created ZenPay. And the idea was very simple. Keep the cost low. Have an online portal. So it's a self-service model. So we are no agents. There's no sort of telephone call center. Customer goes online, does the transaction themselves, put the details of where they want the money to go, and just send it. It's very easy. And it could work. And we were operated on a very low margin, very low fees. But last year, when in September, I was talking to President Clinton during my CGI visit here, and I spoke to him about this. And he also highlighted that how important this is an issue. So I went back and I changed the business model radically. And people thought I've gone mad. But I'll tell you more about what I did and what model we have actually changed. So the scale and size of the problem is huge. 1 in 10 people around the world is actually directly affected by remittances. Either they are sending remittances or are they receiving remittances or their families are receiving remittances. And it's so important we talk about women empowerment, something which I'm personally very passionate about. 2/3 of the recipients of remittances are women. So it really helps the cause. And, the whole remittance industry is about 3 times the global foreign aid budget, which is a very important point because in quite a few countries, including the UK where I come from, there's a debate about whether aid is effective or not. When we give so much money in aid, but whether or not it is effective. Whereas with remittances, we know for sure it is effective because it's going directly into the families and it's going towards the education of the children or healthcare of the elderly and so on. So it's absolutely very vital that the cost of remittances are low. The cost has come down in the last few years, but rather slowly, and now the global average is just under 8%. And I know the global market size, according to the World Bank figure, is just over $600 billion. But, you speak to people around, and a lot of estimates is that it's well over $1 trillion. So it's a very, very large market. Nearly 8% of that, which is $80 billion a year, gets lost in fees and overcharging. And I say overcharging because I have heard enough rhetoric about the actual cost of transaction is very high, and I refuse to accept that. I don't think the cost of transaction is so much high. I think firstly it's overcharging, and secondly it's the cost of customer acquisition, which not many people talk about, but I know Jerry mentioned that in his previous talk. So there's increased cost of customer acquisition, and there is a significant overcharging going on there. So this is a very important cause, and it's important to understand that this is not just we understand we are a commercial organization, but it's not just a commercial reason. It's actually a very important social cause. So what is ZenPay? ZenPay is an online money transfer service. It offers bank to bank and bank to mobile. So you could effectively send money to more or less any bank account in India, worldwide. And in about 7 countries, you can send money to mobile phones, like in Kenya, M-Pesa, and so on. So we've got tie-up with that. And then next step in a year or so, we will launch cash. But right now we are focusing on bank-to-bank and bank-to-mobile services. So cover a very wide range, about 173 countries, 48 different currencies. So altogether just under 3,000 currency corridors. So traditional money transfer companies make money from two things. One is the spread that they put on the FX, which can be very large. I mean, I was just calculating the largest money transfer company in the world, and we all know who that is. I was checking from UK to France, if you have to send money, there's a 10% spread of FX. It's unbelievable. I mean, it's a 10% spread, and there is a fees on top. So most money transfer companies make money from fees spread on the FX and the fees that they charge. So what ZenPay did is 0% spread on the exchange rate. So effectively, we are giving you the same exchange, giving customers the same exchange rate, which they see on Yahoo or Google or Reuters. So it's the interbank exchange rate. How we are able to do that is because of our other business, Rational FX, where we are serving business customers. And because we've got very large volume, we get very fine exchange rates from the market. And without putting any markup, we just pass it on to the customers. So absolutely the best exchange rate, arguably, that you can get in the world. Customers can pay by bank transfers to us, or they can pay by debit card or credit card. So if it is a pound or euro debit card, it's free to use. If they are paying to us by bank transfer, that is free. But all others, unfortunately, because we have a cost, so we pass it on. If they are paying by credit card, unfortunately, we have to pass on the cost to the customer. Customers can go online and use the service from there, or we've got an iPhone app. They can use it through that. And before you start sending money using our platform, we can't send money from the US right now because of the regulatory issues. Which is a very interesting point, actually, because we are based in the UK. In UK, because of the EU arrangement, if you are licensed in one country, it gives you access to 27 EU countries. You can effectively passport your license. So one license, 27 countries. In the US, one country, 50 licenses. Because each state, you have to take a license. So it can cost a lot of money and a lot of time and a lot of paperwork. It's a very tedious and expensive process. And that is preventing competition in the US market, including our own company, which is not yet operating. So it's a very simple online service, and you can pay by debit card, credit card, or bank transfer, send money to a bank account or a mobile wallet. And it's a very easy process. It's a sort of 5-step process. So where do we make the money? So 0% spread, and we launched a pay what you want service. So at the end of the transaction, we will suggest a fee to the customer. So for example, if you are sending £500 to India, we'll say, look, thank you very much. We've saved you £20 on this transfer. We think you should pay us £2. But it's entirely up to you. It's totally editable and discretionary. So the customers can pay less, pay more, or pay nothing. And it's very interesting how demographically you see some customers pay and some don't. So please don't worry about, I'm not going to shame any particular, we are sitting in the United Nations here. But it's very interesting to see the demographics and how some customers pay and some don't. But that is the model, really. But you know what? It's very interesting, because when I suggested this originally, everybody thought we've gone mad, that why would somebody pay? Why would anybody pay if it's discretionary, if it is optional? But I have faith in the mankind, and this has been reinforced by the data that we have. So we are endorsed by people like Jimmy Wales, who is the founder of Wikipedia. He himself is the founder of a very interesting business. So it is free money transfer, but it's purely by voluntary contribution. 87% people pay. 87% people pay, which is extremely interesting, because you would normally think no one's going to actually pay. So it can work. People do believe if you provide a good service, people will pay. And you can see the growth. So since we changed this business model in November last year, so it's been 7 months now, we've been growing 35% every month consistently since then. So we are one of the fastest growing businesses in the UK now. So it can work. It's a cooperative kind of model. Let people pay what they want to pay. This is how, it's almost like a tip. So how's the behavior? You find that Germans, any Germans in the room here? Peter. See, I knew our chair is German and that's why I put it there. But Germans are always, they're always, we find that in our, they are always paying and paying quite generously.
Oh, yeah.
And nearly 66% people go with the suggested fees, whatever we suggest. The suggested fees itself is so small, it's 0.4% of the amount. So it's very small. But 67% people roughly go with the suggested fees. And then there are 6% people like me who pay over and above. And you'll be surprised that why would somebody pay over and above, but there is a small fraction of people who believe that they should pay what they're receiving for the service, the quality of the service and the exchange rate, fantastic exchange rate that they receive. And there is a very small population, about 13% who don't pay. But it is very interesting to see all these dynamics. But this is really our sort of secret sauce, where you are making almost like a cooperative and giving power to the customer. So people talk enough about democratization of financial services. We are actually doing it. It's almost running like a democracy. People decide the fees. And for Nepal, we have even removed the discretionary fees recently, so people can just pay for free, just as a gesture of goodwill, with all the problems. So we have recently launched the service to Nepal. And it is very interesting. And people ask me, what if this model doesn't work? What in a few months' time, 1 year, 2 years' time, you realize that this actually doesn't work? But I believe that it would work, and people would pay generously as we particularly scale up, because the cost of transfers is so low. Just to give an idea, our cost of sending money to India is 40 pence per transaction, 40 pence per transaction, regardless of the amount. So it's so the transactional costs, particularly in the sort of, if you are sending money to a bank account or to a mobile phone, is very little. The transactional cost is very small. There's no reason to overcharge the customer and charge them 20, 25 pounds. So the real cost is not the actual cost of the transaction, but the cost of customer acquisition. So there are some online businesses in the US as well who I look at, and one of them is a listed company, and their cost of customer acquisition is about $70. They spend $70 just to acquire the customer. So they have to then charge to make that. And then generally the tendency to overcharge, because you can get away with it, might as well charge. And we find that the cost of sending money to sub-Saharan Africa from UK is as much as 25%. So these are poor people, hard-working people, sometimes in 2 jobs, 3 jobs, saving money, sending money back home for their families because they rely on that. And these people, 25% of that is just gets lost. So that's what it is. So we are growing very fast, which is extremely exciting, and we are sort of going through a lot of challenges. Regulatory challenge is one. Like I said, we can't expand in the US and some of the other countries. Regulatory challenge is one. Acquiring the customers, that's another. Not so much of a challenge, but it's interesting because some of our competitors who have got absolutely millions and millions, tens of millions of dollars, they are spending in marketing. Instead, what we are doing is, instead of spending money in marketing, we are bringing the price down so much that the customers just spread the word themselves. And it is working because it's a community-based kind of service. So people tell their friends and families. So that is working quite nicely. And it's a Clinton Global Initiative pledge as well. So we have pledged that over the next 5 years, we will save customers $100 million in fees. And we are very well on track on that. And we might actually do more than $100 million in savings for our customers. So it is absolutely the right thing to do. And you keep on working, whether it's, and right now we don't do cash, but I think we are working on it, and in next year we'll launch cash in quite a few countries. The biggest challenge for us is how do we make it viable with cash with such a low fee. But I think if you find the like-minded partners, then it would work. I also believe that in mobile wallets, I think regulators should intervene, and particularly the remittances that are coming from abroad. It's foreign exchange coming in the country. So any money that's coming from abroad, the regulators should tell the telcos not to overcharge. I mean, you find in a lot of these African countries where mobile wallets are very prevalent, there's a huge amount of charge that these telecoms actually make when money comes in the country. I think something like that should work. But the technology is there now where we can now bring the cost of money transfers down, and there is no reason why it should be so high. And this is one of the pictures of our customers actually, and we've got quite a few of these pictures, but this is just one that I've used. It's such an important thing. For somebody, it's not just remittance. For somebody, it's medicine for their parents. For somebody, it's the school fees for their children. People use different, like in Africa, it's very common for people from UK or from elsewhere sending money back to Africa for their funeral insurance payments. So there are all sorts of reasons people say, and we need to understand the human and the emotional side of it and not just see it as pure money. And also now with the technology, it is possible to make it a viable business. It's not so much all around charities. So yeah, it's a small presentation, but thank you very much, and I look forward to any questions.
Thank you very much, Rajesh, for impressing us. You know what I liked most about your chart about the generosity for your customers, saying it's Germany, but actually it's the migrants in Germany. So that makes me proud. Thank you for that. And we pass on to our next presentation coming from France, from Paris, Lucille Paysan, and talking about not only about money in the end, but another new aspect, innovative aspect about transfer costs. Please.
Yeah, thank you, Peter. Hello, everyone. As you said in the introduction, we are avant-garde, so to say, in French, because we have a new business model with, at the end, can I have this? Thank you. Thank you. Yeah, with at the end no cash, but only goods and services. So we call it cash to goods. For example, with Afri-Markets, it's easy. You can pay directly from Europe products and services for your relatives in Africa. As you see it on the picture, there's a first option, which is delivery. So the sender is going to choose all the products that his family is going to receive. The option 2, which is historically what we developed in the first end, is e-voucher. So, for example, you want to send money to your son in Dakar, Senegal, tomorrow morning. You're going to just pay with Afri-Market in one of the cash-in of the network. It can be online. It can be on your mobile phone. It can be in an Afri-Market agency in France. And instantly, your son is getting a text saying, Lucille has sent you 100 euro, or the equivalent in franc, in food. Your son is going to one of the supermarkets of the network. It just does his grocery shopping, and then he's going to pay with his mobile phone at the end. So this is the e-voucher, and here you can see how it works at the cash out point of sale, who we are partnering with. So my son is going to the cashier. The merchant enters the transaction amount. My son is gonna enter his numbers, and the PIN code, and then the transaction request sent to the server. The server called the phone with an encrypted sound, and my son just had to take the phone, put his phone on the payment terminal, and then the transaction is validated. So this is for the e-voucher solution. This mobile payment option enables us to guarantee that your beneficiary is going to get food if you have chosen food, is going to get medicines or some hospital needs if you have chosen health, and etc., etc. So for now, we're not as big as UA Exchange. We don't have this huge historical background. We're only 2 years old, but working hard on these two options for cash to goods, so the e-voucher and the delivery I mentioned. We're a bit disruptive, quite disruptive in the way we do, because we can have a transparent fee of 5%, as the World Bank mentioned some years ago now. So now it's 3%. We will work on lower it down, but we have some challenges to fix before. So there is no minimum of send, no additional fee on the AFEX that we can afford, because we are working from Eurozone to CFA, so the exchange rate is fixed for now. So as for today, we're in 4 countries: Senegal, Benin, Togo, and Ivory Coast, in about 30 cities and 300 affiliated point of sales. And we have 30,000 plus users as for today. So in 2 years, it has been a big growth, and the need is huge for cash to goods. So people need that. They want to know how the money is spent. And what we need as a company is, in fact, more data about how many people would like to use cash to goods, for example, which kind of services or goods would they want. At the end, this would be an interesting study. So our business, how can we charge only 5% to the sender at this small company which has some cash issues as well? It's simple. We have this business model between the client. So he just pays 5% because we're also taking a commission from the local partner networks. So all the supermarkets, drugstores, libraries, etc., we are partnering with them. And as they can get with us the money from the diaspora, they get us back a commission when someone is coming to the shop and do his shopping. So with this model, we can we secure margins commensurate with what traditional players charge, which is on average more than 12% towards Africa and traditional MTOs, while reducing cost of remittances. So this is because we also don't pay for this cash-out network, which is quite expensive for traditional MTOs to pay for. We just take commission from our disruptive cash-out networks. It's also interesting for the States where the money is remitted, because we channel remittances to the formal sector, to merchants employing people in the formal economy, paying taxes, etc. And then finally, for the regulator, because this panel is also on risks, on commercial and regulatory barriers for new entrants in the market, this model is less prone to AML and terrorism financing. Why? Simply, bags of rice don't explode. They're not weapons. So with this business model, you ensure that there is no cash at the end. So the goods are well used, so they can be, and it's mostly healthcare, food, and education for now. Key in our model is the selection process of our affiliated network of merchants. So as you have seen, we're partnering with them, and there's a huge selection and enrollment process with business and conformity audits, and also a maintenance process during their entire lifetime with us. We do blind tests to make sure they don't give cash out, for example, to make sure that the money is going to be taken in goods at the end. And so this is for anti-terrorism. And for the EML, anti-money laundering risk, we still have a lot of KYCs, because we're taking that really seriously. So the KYC for the sender is quite light. It can for small amounts, but then we have developed algorithm to see the unusual outside of the box transactions and then take actions. When I say outside of the box, it's for transactions that are suspicious because the amount is big or because the use is quite well considered by the algorithm as a normal, and then we can observe and take actions. For bigger amounts of money sent, we collect the ID cards of the senders and set them to the list issued by compare them with the list issued by the government, such as politically exposed persons, for example. So to us, regulatory barriers are not barriers, actually. We have more commercial barriers as for today to develop properly. Why? Because it's new. So evangelizing the market, it's a big challenge to make people know that cash to goods exists, that it is possible, and on our 4 corridors, but maybe later on worldwide. And also because we are really keen on developing a cash-in network for senders. Why? We were talking yesterday and also this morning about internet-based solutions, as my colleague mentioned earlier. We know and we have observed that a lot of people in sending countries don't have access to internet, and if they have, or bank accounts, and if they have, sometimes they just don't use the bank accounts that are unused that we mentioned this morning. So cash is still really important, and we want to have these low fees available for people that also need them. So developing a cash-in network is really expensive, but it helps us to broadcast this cheaper solution for poor people needing them the most. So we don't want the poverty trap to go on. We just want to make poor people richer. So this is one of the big challenges, and this is why this is so costly. And finally, the last commercial barrier is lacking credibility. We're a small startup. We're 2 years old, but as you have seen, we have already done a lot, and we want to continue. So for AfriMarket, and I'm talking about the whole team now, it's a pleasure to be here at the World Bank and to talk in front of all of you about what we do, because this is also proof of credibility for us. And also we have important investors with us, such as Orange, which is the big telecom group in France, which invested in the company in early 2015. We were thinking, and I was discussing with my colleague about what should we ask the World Bank or UN institutions. As for today, we were thinking about this lack of credibility. Maybe there should be a label for some companies or new entrants within the markets, just to show the credibility by institutions. So maybe it should be well, I won't say any name because I don't know what it could be at the end, but this could be an idea for some new entrants to just gain credibility and having more chance to succeed. I'm going to end up, all the pictures you've seen in the presentation are actually deliveries we have done, and this one is in Senegal, in the Fouta, which is the far east region of Senegal. They don't have any money transfer operators, cash out. They don't have any supermarkets, just the local markets, and they don't have banks. But there is a huge amount of migrants living in France and Europe, sending money home. And we are going there. So we have a truck, and we're going to Futa, and we're collecting all the orders of the migrants in Europe, and we're delivering to their families. So what we do is that, and what we believe in, is that sending money home is a fundamental right of people living abroad. And usually, especially in Africa, I don't know much about the other corridors, some families rely a lot, if not 100%, about the money that is sent from abroad. So in some countries where this is difficult, we're ready to discuss with policymakers, institutions, to see how we can implement our model. If people can't send cash for any reason, at least they could pay for food and basic staples for their families. And that's what we believe. So we're doing cash to goods for households. We're doing cash to goods for associations as well, for some groupments, and usually it's village groupments from abroad that are getting back together and financing projects. So we are working with them to help them deliver goods or health or education goods. But also we could, and we would be pleased to work for aid for any institutions that has this kind of projects, and that's why I was mentioning this FUTA project that we're working on. Because in rural areas, there's the situation is worse, but we have we can go there, and we want to go there, and we want to continue our work. So maybe it could be an interesting thing to think about together. So spreading the cash to good model worldwide is our aim, and we really think it could work in any other corridors, as we have proved that the model works because the need is huge. Thank you.
Thank you very much, Lucille. And hands are going up already. I was wondering maybe Sonia or Dilip want to enter right into the certification issue about this, but we'll do one after the other. I see John Bingham, please.
Yeah, thanks very much, Peter, and thanks to the panel and thanks for the reference to the label idea and certification. So I don't know if Dilip or Sonia want to jump there, but I do. I'm curious, very curious, if in any of these business models, especially those that have been running for quite some time, if there's any independent assessment of the services, independent perhaps by users or migrants, maybe by regulators, but who's saying the same, who expresses the same enthusiasm that you do, for example, about the services, so that others like us can pass it on, and in an enthusiastic listening to the presentations, I really wonder in these rooms and in these processes where we're dreaming about reducing remittance costs and so on, I'm wondering if the reference to reducing remittance costs in 10C of the Open Working Group's lists of goals and targets and so on, if it's the most unambitious goal and target in the whole thing. Why are we talking 15 years to get to 5 or 3% if these services are talking already well beyond that?
Anybody who wants to react directly to this, or we rather collect some questions as we did before? I pass on to Daniel Neujux.
Thanks, Peter. Am I on? Yes. Thanks for these presentations. I think it's brilliant what people do in terms of connecting migrants to their home communities or communities worldwide. But I still want to have playing like John does, like playing devil's advocate and reminding us of some limitations. So, a question to Lucille. I understand that providing a service to actually bank those people and provide them with an access to cash worth services is good. On the other hand, every time when we have a service and something that limits the agency of the people back home, it's at least we have to have a question mark. And we all have been discussing the remittances, how much the senders should have control over how the assets are spent. We all know the stories that people send money and this money is spent for something else, and the migrants have to send more and more money. But I think we all agree by now that it's not just the migrants who have to decide where the money goes. It has to be, generally should be, a household decision. And there are some good projects. I mentioned the Pinoy Wise project in the Philippines that I had the pleasure of assessing a couple of years ago, where they actually conduct financial literacy education for the entire household, migrants and the people back home, so they together come to agreement what they should be doing. So the question is, do you consider how, in addition to just providing them with access to goods that are paid for, having other options, because we know that can lead to market distortions if they it leads to then focusing remittances only on getting food, whereas there may be other options. It limits them to those shops that actually get this or are partners, and all the other economy, including the informal economy, is excluded, which can be good, which can be not good. So just how can we actually increase flexibility in the agency of not only the migrants but the household to receive the money?
One more comment, Pietro.
All right. Thank you very much for the presentations. Again, very inspiring. Just 2 or 3 questions. The first to Rajesh. I mean, you certainly are majorly disruptive, or with the potential of being very disruptive. And I mean that with in a positive sense, of course. But the question is more, I mean, what kind of reactions have you had from the more established money transfer operators, knowing that they have sometimes not the most elegant way of embracing competition? So this is one question. A second question is also a little bit, what is your thinking of, I mean, I'm being sort of a bit devil's advocate here, but sort of going back to the cash model, when we are all talking about sort of the digital revolution and sort of digital transfers is the future. But in your presentation, it came out quite strongly that you're really sort of almost looking forward to this step as really sort of a big element of expanding your business. So can you just maybe develop a little bit more what you're expecting from this transfer to cash system? And a question also to Lucille. I think it's a very interesting model. It takes up what I mentioned before, sort of offering different opportunities and breaking down basically the barrier of cash in, cash out, and then what do we do with the cash. You also said you are and you hope to be even more disruptive. My question is more, how do you prevent, with your current model, of being disruptive, not for the money transfer market, but for the local consumer market? Considering that the transfers that you have, sort of cash to goods, necessitates, even though maybe a limited infrastructure, but in these markets, particularly in West Africa, a lot of markets, I mean, this is the lady coming with the potatoes to the market and selling them there. I mean, she may have a rudimentary cell phone, but she certainly doesn't have a connection to a server being able to be paid through your service. So is there a challenge, a problem of crowding out smaller farmers or merchants on the market by offering this system? Thank you very much.
I pass over to the panelists to react on this first round of questions, and let's take the order as we had the presentations. Mr. Shetty, you wanted to react to John Bingham, if I'm...
Now, you know, for so long we have been offering the remittances at a very low cost why this is not being practiced in other markets. Maybe I think what led us to look at reducing the costs over a period of time was, one, you need to encourage competition in those markets wherever there is no reduction happening now. There must be entry barriers for more operators to come in. But in our markets, we have 138 operators only in UAE for such a small market. So when you have fierce competition, you look at ways and means to beat that competition. And that's how focus on quality service at an affordable price, large communities, so market is there, so you try to do something which others don't do. So even the adoption of technology in our case happened as early as 1994. We thought of investing into technology, building up our own IT team, and then start looking at where the business is going. So because we had our own IT development team, we could roll out technology as it emerged. And if you are with a vendor, it is again cost. If you are having a very huge cost on IT infrastructure, naturally somebody has to pay for it. And broadly, all these extra expenditures are being passed on to the customers. Now, of course, in the last 13 or 14 years after the 9/11, we have the additional cost of compliance, securities. We have not passed on any of these costs to the customers because technology was there to take care of these additional requirements. We went on to register the customers right from 1996, not because of the KYC, but because we wanted to save time. We never wanted to fill up a physical form for the customer every time he walked in. We captured the data, kept everything in the system. All that we did was we generated a card for the customer with his photograph and the signature. And every time he walked in, he had to just tell us how much he wants to remit, because all the details of the beneficiary and the remitter was already available in the system. So technology is one which really helped us to scale and also to maintain or reduce the cost over a period of time. I think these two factors, if we encourage in every market, there is no problem to offer the service at a very affordable price.
Yeah, so you're right. Put on the mic. Sorry. You're right in terms of, I think it's very unambitious, actually, and I mean, this is probably just, that's the way governments function, I suppose. But it's taking a very long time. We move a lot faster, and competition is good. So competition is one big thing. I think you increase the competition. I mentioned that point about how difficult it is to deal with the regulators in the U.S. 50 licenses, it takes a good few $1 million to get all those licenses and get going. If you have a license in New York, you can't deal with the customers from New Jersey. And it's very backward in terms of regulations. And because of these regulations, there's not enough competition. And because less competition, customer has to suffer. So ultimate answer is use of technology and let the competition comes in, and everything will be taken care of by itself. And talking about competition, I mean the largest money transfer company in the world and is now acquiring the second largest money transfer company in the world. And actually not many people know, well, apart from UAE Exchange, third money transfer company in the world. So there are only 2 or 3 big names in money transfer industry that people know about. So it's already very short on competition, and of which the largest one is now buying the second largest one, or at least there are talks in the press about it. And it is a dangerous trend, I believe. We need to increase more competition going forward. Now, in terms of disruption, yes, I like you already. Disruption, we are all about disruption. We are disrupting the market. And we are probably still small, and maybe the large money transfer companies are still sitting in their comfort zone. So we are still flying under the radar a little bit. And they think, okay, this is not going to work. But we are at the same time seeing that they've started adopting technology. But it's different when you are a very large traditional business adopting technology to an online-only business, which is the starting point is very different. So I think it will take a bit of time for them to catch up. but surely they are working towards it. But the reaction is really, is that going to work? That's the reaction I get from that. You mentioned about cash. Cash is still important. Whilst we are talking about mobile wallets, which we are integrated in already doing the bank transfers. But there is a component in quite a few countries where cash is still important. In South America, there are many countries where cash is still quite important. And I think it will have its own place for a few years. You can't just eliminate cash altogether as much as we wish that. It's not going to happen. So cash is important as a bridge in a few years.
So regarding the household decisions, that's true. Well, what we based our business model on is that there is I think the UK aid agency some years ago that was in his report telling that 70% of the households sending money wants to know how the money is used. And we don't have a lot of data about it, at least for households to households. And what we can observe and what we know that there is a lack of trust within families. As you say, there's all these stories. What we do and what we are working on every day, that we want to give more options to the receivers, so to the sender and the receivers, to just make them choose together what they want to get. So true, there is the basic needs, foods, health, and education, which are the biggest part of our business, the biggest money amount sent. But there's also the building. So we do that for some people as well who wants to build a house locally. And all these electronic devices for small businesses. So we have some people as well wanting to open a coffee shop for their brother or sisters, or some small shops to send food. So we can also deliver this appliance, such as, I don't know the words in English, refrigerators, these kind of things. So yeah, we are offering more options to them in order to fulfill the needs locally. Regarding disruptions, locally we want to be even more disruptive. And for now, as you say, we're working with formal supermarkets and formal shop. Why we can't do that with the woman selling yams on the market for now? That this is informal, and then we're not able to pay her when someone is going to get the yam from her on the local market. But this is a huge topic, and I think we have to work on that, but it would be with local governments to make sure that these people selling on the market can actually be declared and can then pay taxes if they want to, which is another issue. But what we do, and the pictures you've seen at the end, is that in the Futa, we work with a local entrepreneur. So he has his own truck. This is not ours. And this region is a bit particular because you have one big road and a lot of small villages around. So it goes from one point to the other. If I'm not mistaken, it goes to Urosogi at the end. And then he can go to every little villages. So we're working with him. He's declared, so we can in the formal economy, we can work with him, and we are giving him a lot of new orders from abroad. So it works quite well. And also, I wanted to mention we do disruption in deliveries. As you may know, and in the Futa, for example, which happens, it's tough to find where the people live. There's no post address and there's no post office either. So we're working with local people having motorbikes. And for food, it works because it's not too huge. It's called tricycle in French, so it's tricycle, as well. And you have this big thing you can put goods on the back. So we're working with them and we are financing the boat of motorcycle, and then we can work with them because we know they're the one who knows where people live and who knows all these streets. If you go to Abidjan, you can hear that, yeah, I live next to Total station between this and that. And if you don't know the city, then you won't be able to deliver. So that's another way of being disruptive.
We take another round for questions. Kirsten.
Parts of my two questions have already been answered. So my first question was mainly to UAE exchange, because you quite disrupted the market in the Gulf region and the costs went down. What prevents you from disrupting the rest of the world in terms of the market? So where are the main barriers? We've heard some of that. We also heard Senpay mentioning some of the barriers. But what is actually stopping you from shaking the big player or the big players? The second question is more first of a comment about AfriMarket. I don't think this is a business model that will replace money transfer. I see it as a great option. That is another option for people who don't have that many options on how their money should be spent. If you think that you would like to send cash remittances on a monthly basis, but on the other hand it's Mother's Day, and you just want to send something that really looks like a present. And I mean, it can have all of these options. I think it rather increases agency than only reduce it, as long as it does not displace the other players on the market. That's the way I see it, and I think it's a very interesting business model because it combines the foreign exchange and remittances with the deliverable enterprises that often do not exist. Because if you think about Amazon, for example, you have Amazon in the US and you have Amazon in Europe. A lot of times now, myself living in the US, when I buy things for people in Europe, I go through Amazon Europe, but I don't have the remittances or the exchange transfer included. So if I only had a US credit card, it would cost me a lot to pay directly with that on Amazon. So that's what I think is very interesting. And I'm just wondering, I mean, you have now explained a little bit of how you organize the delivery locally, and there are a lot of challenges there. If you're actually cooperating with existing enterprises on the ground that do these deliverable things, and if you expand to other countries, you might even think about partnering with bigger enterprises in countries that are developing. Okay.
I allow one more question, not from the World Bank team, sorry, G, but everybody who still has something in mind will have another session which is very related to what we're talking now, so we can take these questions up as well. I've allowed one last question, which was in the room for longer, and then we...
Thank you. First of all, it's been very refreshing to be a part of this dialogue. And when in Harlem we have Little Africa, so we have transferring funds all day long, and I guess you would call it a part of that remittance. And the concern that I have here is that why aren't we educating the customers that they will be empowered to make conscious decisions in receiving and sending money wisely in the banking industry without destroying the bartering system and the tradition and culture way of dealing with funds and relating to each other across borders? How do we do that to keep the integrity within proposing the new system for banking, which will be, from my understanding, at a lower cost analysis, different from that of Western Union and some of the mainstream way of banking and transmitting funds back and forth? How do we do that? Thank you.
Last round of answers from the panel, please.
Yeah. Why we have not done this in other markets? Of course, in the entire GCC, other than Saudi Arabia, we are present. And in all these markets, we are charging the same thing what we see in UAE. For the last, say, 4 or 5 years, we are in some markets in Africa, where we have a retail presence. We introduce the same product and the connectivity to those outlets, so that we were able to bring down the cost of transfer out of these countries to the other parts from where the people are doing some projects in Africa. Now, we have the online portal Money to Anywhere service, which is being used in US, Europe, Australia. When we introduced this product about 8 years back, the online portals were charging something around 8 to 10%, and we introduced our service, which was almost about 4% transaction fee, and very fine FX rates, because when we introduced Money to Anywhere in these markets, only the banks were providing the online portals, and the FX rate offered was very, very poor. So we created this kind of competition in these markets, and thereby made the banks also to reduce the charges to these corridors. So it's happening. But the only thing is, of course, the kind of penetration that we have in the GCC market, we don't have it in the other market, but it is only coming because we are there in those markets for the last 7 or 8 years. Now, in terms of the educating the customers, in fact, as I mentioned, we consciously made the customers to move from instant cash to the bank transfers, where we went to the place of their work, conveyed to them how important to have the bank accounts back home, so that the cost per transaction would go down. Over the years, we have seen the market shifting from cash to cash, person-to-person cash product to cash to bank account product. Now, in the last 4 years, as I mentioned, we have opened more than 1 million bank accounts in the UAE market, which is being replicated in other markets as well. So it takes a lot of time to convince the customers that there is a better way of sending money. And if we show them how it is beneficial to these customers to reduce the cost per transaction, there is an incentive for them to go ahead and do that. And in our markets, we have facilitated account opening for various banks for the customers. Whichever bank they wanted to open an account, it has been facilitated. But now we have the bank representatives sitting in our markets, and they themselves go around and create an awareness among the customers, the importance of opening bank accounts. I think one way in other markets also to see how effectively these operators can communicate to the customers. Now, most of these markets, they are not doing it because the present system is allowing them to have more revenue out of every transaction. I think we consciously went out to see that, let us concentrate on the value for their money, because they especially in the Gulf market, the earning by these low paid workers is very, very low. It is as low as $100, $150 a month. So even very small amount of saving is really very important for these customers.
Last quick point from Rajesh.
Yeah, just quickly to add to the point on the awareness. I think it's absolutely an important point that you have mentioned. A lot of times, particularly in Europe, customers are not even aware how much they are paying, because the profits are built in the exchange rate. So it may say free money transfer, but it's actually not free, because there's a lot of price built in the exchange rate. And there are no regulations preventing that. In the US now, there is some regulation, and they start putting a little asterisk, and at the bottom they'll write FX gains apply. That's all, but the customer still doesn't know how much they are paying. So one of the campaigns, a political campaign that I'm involved with in the UK is to bring more transparency in the remittance market. So when but we have to work out the logistics of it, but when the customer is actually doing the transaction, they see an exchange rate, but right next to it, the companies will have to display what the interbank exchange rate is. So customer actually know what is the spread that they are being charged. So at the time of the transaction, this is the exchange rate the customer got, and this was the interbank rate. So I think at least customers will be able to compare how much they are losing out. But it's absolutely important to bring more transparency in. So on the exchange rate, on the fees, and that can only be some legislation around it, but just general awareness on the matter would help.
So regarding education of customers, we're doing it by offering a new way of sending money, because if they know they're going to send X bags of rice or other food, then they will spend the money more wisely, probably. With Africa, it's also a big corridor from Europe, so we have a lot of customer interested in using our products. But as I said in the presentation, this is one of the commercial barrier, because we want to evangelize this new way of sending money. However, it takes time and money, so we're working on it, and I hope it's gonna grow and be the new future of remittances. But as you said, also this cash to goods model won't replace cash to cash, and we know that it's complementary, and especially for, as I mentioned, aid as well, which could be a way of using our business model. We know it won't replace cash to cash, and especially during social events. But as you said, we could partner with some companies already delivering that the way we do, but there is not. Well, very few, especially in West Africa, because there's one big company doing deliveries from Europe to West Africa, but within the countries there are new entrants of e-commerce industries that are beginning to deliver locally, but it's on the early age. So maybe we could be together to have a bigger impact. We'll think about that.
Sonia, you were the one reminding me of cutting short the session. You want to have a comment still?
I will take my questions over the lunch.
Excellent. It's a good example, and you mentioned an important word. Thanks, everybody, panelists as well as discussant and contributors, for an amazing session, I think, but also for your patience and it being enduring for the upcoming lunch break. We return to 2:30 for our next session. 2:40, please. Thank you, everybody.
Thank you.
And give a round of applause to our panelists. Thanks a lot.
Lucille, very nice. Let's go for lunch. I wanted to discuss with you because...
but I was telling to, I was telling that do some work. All the people you go as much. And then we can go to the library to all the stuff you really need. All the people you need.
Well, we'll see.
Richard,
Sure,
just a
sure.
second. I'm just
No
going to
problem.
just click and send.
No problem.
Thanks. Sarah?
Yes.
I just want to say hello. I'm John Bingham with ICMC. I'm from Geneva, working on working on a lot of things in civil society, but employed on the Global Forum for Regional Development,
Fantastic.
the
Yes.
Civil Society side.
Oh, how wonderful.
Yeah, so I do a
Ooh.
lot of work with GMG over the years
Right.
and recently.
Let me give you a card.
Yeah, and I don't have my own card.
Oh,
I
don't
ran
worry.
out this
Just
morning.
send me an email and remind me.
Yeah, it'd be great. I wanted to especially follow what I only caught sideways yesterday when you were on the panel. You were saying when it steps into the role
Chair, yes,
at
next year.
GMG.
Yes.
One thing you may be looking at is migrants or women in transit.
Yes, exactly.
We are
In fact,
super keen about it.
oh, let me
Broadly-
talk. Please, let me talk to you about that. And let me hear
Will
about
you
what
be
you're
here
doing.
this afternoon? Or
I will be here this afternoon. What did I do? I could have sworn I had
I'll come
class.
back. I better run
Yeah.
for an appointment right now. But I meant to see if I could catch you this morning.
Definitely.
You want to lose your...
Oh, I'm sorry.
Yeah.
Yes.
No.
No, I'd really like to because we also have an EC-funded project on protecting migrant women workers, and it's
At the workplace or?
well, it's sort of in the migration experience writ large, using
good.
seed or
Good.
what other kinds
Good.
of how to
Good.
support civil society organizations making claims on labor and human rights mechanisms
Good.
to protect
Good.
migrant women
Good.
workers.
Yeah.
So we're doing
Recruitment
quite
and the whole thing.
the whole shebang, exactly. But one of the countries is Mexico, and Mexico decided to view itself as an as a host country, looking very specifically at the experience of migrant women from Central America in Chiapas and that region, the southern region.
Sure.
But we also have a focus on transit, and in fact we have
Mexico doesn't want anyone to look at.
exactly.
Ever.
This is kind of a huge issue for us because we have money from the EC to actually work with the SRSGs on some of these issues. And the Mexico office, of course, Mexico's people at this point in time in which the railway system is and so what that means then is that they're very ginger about anything.
No, all shut down. Yep.
Yeah, we had a migration consultant. I don't want to detain you right now if you're running.
Yeah, I'm meeting some people while you're in the
talk to you also sort of more broadly about claims making by civil society on labour and human rights matters, and sort of what way we can increase their capacity to do exactly that. Okay, that would be really neat. By the time I will find my card and not give you the 500 that I did to collect it from everybody else. Okay.
Great. But it's very, very exciting. When I heard that yesterday, I almost fell off my chair.
Yeah, no, I really do. I mean,
because it also goes across, it goes across so much of the GMG, so it's not a forced issue for the group. It fits.
It fits incredibly well. I mean, and we'd like to do also more with the ILO and the fair recruitment initiative, and labour market intermediation, but also just, social protection in trades.
You might, I mean, as in you work everywhere, you might have a hard struggle trying to figure out out of all the things that are possible and urgent.
What to focus on.
In 1 year chair, it's GMG.
Yeah, it goes in lots of different directions. I can see that.
Yeah. And you're going to have to, just from the spectator seats, the only time we've really seen, and it's maybe too sad, the only time we've really seen the GMG really forge forward when the chair said, this is what we're doing.
Okay. Well, I mean, it's clear that the bank has defined very much what its focus is, and it's doing that in these, So, there is that opportunity. It's interesting you say this, because I had a conversation with
He's great.
He's really great. But he was cautioning me against using the GMG as a vehicle for UN women. Like, no, but we want to elevate the focus on migrant women workers through the GMG.
Which cuts across.
Which cuts across everything.
So he makes a great point, but it's not the opposite of putting a finger on
Exactly. And having more focus.
Women, girl, children, whenever it goes across.
Your email that, and I promise, and just say, remind me, civil society. That would be great. So important.
We'll be focusing a huge focus in broad civil society on migrants and transit. A specific focus on women and children in context of women, comma.
Bingo.
And children ever.
Yes, exactly. No, I mean, we fight a lot with that because there's sort of, I would like it to be women, children, women and their families.
It's women, yeah.
Yeah, but we fight a lot over these things, and it's particularly important to keep focus on children because we see the GMG, which I think is incredibly sad. And they dropped out. They just said they don't have the resources and staff to really devote time to that.
Well, anyway,
okay. Yes.
It fits everywhere. It doesn't mean it's even when we're forcing an issue down agency throats. It's in every one of the houses.
You're not going by any chance. The UNU is holding a migration conference in Barcelona next, maybe 2 weeks time in June. Because they're doing a whole thing on voice and agency, because they also want to kind of change the focus from sort of victimology and victimization, and sort of also, without de-emphasizing the importance.
Well, that's the word. It's the also, not the either.
Yeah, exactly.
Because,
But anyway, we'll pick it up. Thank you. Sorry. Yes, please. I love that. God, I'm with you in a moment. Sorry, I'm just sitting in the wrong place.
No, it's okay. I was just going to take the full card.
Then I'll put
you
this
did
right
the,
back.
yeah, you did the opening remarks yesterday.
Yes, I did. I somehow managed to obviously move up. I apologize.
All good.
Oh, yes, thank you. Your input was so helpful.
Oh, good.
Yeah.
I'm so glad. I'm so glad. I was wondering if I'm not sure if we're going to get a chance to talk now, because I know this is sort of compressed time frame. Well, I actually will be in Bristol, strangely enough, because my mum lives there. And she lives in Clifton.
Oh, right.
Very handy indeed. So maybe,
Love to see you there.
Could I pop by? Are you at the Townsend Centre or are you in the policy faculty?
I'm in the School for Policy Studies.
Okay, the School for Policy
And the
Studies.
Townsend Centre is cross-university collaboration, but it's based in our centre.
Okay.
So until last year I was the head of that centre, so the Centre for Study of Poverty and so forth.
Yes, yes. I've had a couple of dealings with the Townsend Centre.
Oh, right.
Because I was at the ILO before and we were trying to do a sort of comparative policy analysis of different poverty initiatives, and I sort of did tentatively reach out to some folks there. I'm trying to think when that would have been. Maybe it was 2 years ago now.
Dave Gordon.
Yes, yeah.
This is who I'm emailing at the moment. He's finishing my management plan for the project.
Oh, okay.
We're all working like a team.
Oh, wonderful, virtually. Let me get mine. And you might add. So I will be in Bristol, I'm thinking, from like this. Because I go to Nottingham first because my dad's in Nottingham, and I go down to Bristol. And so I think I'll be in Bristol from like the 20th of
June.
Yes. Are you around?
Yep. Thank you. That's great.
Oh, wonderful. And then maybe we can talk a little bit. I was really.
We'll have some lunch.
That would be fabulous.
That would be introducing some colleagues actually. What we could do is if you want to do some of the other subjects, gender violence.
Oh, that would be good because we're doing this SG report. report. In fact, that's one of the things I'll be doing while I'm there, trying to figure out where to upload it. We do the NSG report on violence against migrant women.
Can I do a little brief of us?
Yes, that would be fabulous. And one of the, and I'm sort of tagging on. We also have these projects. It's easy kind of working on protecting migrant women, where we have those that sort of making claims on duty barriers and using human and labor rights mechanisms to sort of empower migrant women organizations. It's sort of a kind of elevating the voice and agency of women in this process. And sort of looking at the use of CEDAW and shadow voice and stuff like that.
Would you like to do a presentation to us then?
Happy to.
I'm taking on across the whole variety
Oh, God, that would be fabulous.
women working. I'm currently involved in a big forced marriage in Kurdistan. There's loads of us in Kurdistan.
Oh gosh, that would be spectacular. I would be delighted. That would be really neat to do something like that. No idea how much I would like that. In fact, I'm going to, you know, the UNU has a conference in Barcelona, right? Oh, it's a really interesting one on basically voice and agency of migrant women, trying to change that sort of victimization, elevate a little bit more. It's from the 8th, or is it the 10th? 10th to the 12th of June. But I have a presentation that I'm making then on services. So it would be really easy, to recycle the same one and maybe just have a sort of free-form discussion on some of the work we're doing, some of the work you're doing. Okay. That'd be so good for you. Oh, really?
I enjoy this.
Yeah, that's good. I really like. Sometimes I feel like this is too much sausage making. Actually, I find the GMG is much more substantive than I like it a lot and very committed. But I often end up in meetings and I sort of feel like I don't want to see anything else how we make the sausage. It's just too big.
I mean, from people outside, when I was asked to do this, quite honestly, who's talking to do it? What's the role? And who can I tell what to do? And if I change this, I took that. Just sorting it out. It doesn't matter.
Right, exactly. No, absolutely. Yeah. No, absolutely. And that's one of the reasons, no, you should take out. Absolutely, you should, slash and burn at will and really well, the other issue is that some of these, rightly, I think, as I find last picture was no, not Bella. It's Alice. I know Leonardo, yeah. Was that yesterday? There was some sort of artificial distinctions, particularly the kind of perfume using in art that are like OHCHR, and that's going to be a pain in the rear. And, without OHCHR, I can see it. The artificial distinctions, women and girls, this their agendas don't say belong to them. Sorry, trying to read behind you. What used to be
Yeah. I some respect for yeah. Nice to see it. It's very traumatic. Yeah. I do actually. I well, especially after I had franchise when even though I'm, now when there's no more around. So I spent this week in Marion seeing readings of the Guardian and prodding my It's just public. That is right. I really
I'm so busy. About to start?
It's just interesting because there's attention to it. So I really like that.
Good afternoon, dear colleagues. Is this working now? Yes. Yeah, okay, perfect. I would like to call the room to order for us to continue this conference with the next session, which is called New Technologies for Efficient Delivery of Migrant Remittances. And we will continue. We are a little bit behind the schedule, but we will continue until approximately 4 o'clock for this session. And as you can see, we have lost one of our participants, which will give the two participants in this panel a little bit more room, and yourself also for questions. So I'm Eva Åkerman Börje, and for those of you who do not know me, I was the former chair of the Global Forum on Migration and Development during the Swedish chairmanship of this Global Forum 2013 and 2014. And remittances featured very high on our agenda, and also the issue of how migration drives development and how it could be included in the post-2015 development agenda. We looked at health and education outcomes, but also at social political remittances and the role of the diaspora for trade, knowledge transfers, etc. What we didn't look at very much in these conversations were the solutions that technically make it happen. And those kind of conversations are needed. So I think that this conference, the previous sessions, and this session are very, very, very important and interesting. So only less than 2%, according to the World Bank data, of the remittances go via mobile money technologies today in the cross-border transactions. This is remarkable after all we've heard today. And therefore, I'm very happy to be able to present two people who really can help us understand why and what types of solutions do exist and what the future might look like, but also, of course, to pinpoint the challenges and problems there are that need to be solved. So I have two colleagues here on the panel. So first, Amy Ludlam, who is head of trading and risk at BitPesa, and you're based in Nairobi. And I also have Joyce Kim, executive director at Stellar. Very welcome to this panel. I'm not going to make a long introduction, but let you speak for your part of this agenda. You have 10 minutes each to make a presentation of your topic, and then I will open the floor for comments and questions and so on, and then we will wrap up with the two panelists, and I would like to ask you to think about your 2 or 3 most important conclusions and issues to be worked at for the future, so that we can take that to the results of this conference. So without further ado, I would like to hand over to Amy to start with your presentation, please.
Thank you so much. All right, my name is Amy Ludlam. I'm the CFO of BitPesa, a Kenyan payments company. BitPesa's purpose is to facilitate affordable international remittances and payments by leveraging digital currency to decrease costs and increase the speed of transfers. We're a team of 12 based out of Nairobi. Right now we are open in Kenya and Tanzania, and soon we'll be open in Nigeria and Uganda. The way it works is a customer, an international customer, in their local jurisdiction goes out and finds a way to buy Bitcoin. There are plenty of local exchanges depending on where you live, different channels, but you buy Bitcoin to use that Bitcoin as a token that you can send to our platform once you sign on with us and become a customer. You send that Bitcoin to us, and we cash it out into local currency, so Kenyan or Tanzanian shillings. So Bitcoin, you can think of it as digital cash or a payment mechanism. It's the only one that we accept on inbound transactions. And then on the flip side, local Kenyans and Tanzanians can buy Bitcoin from us. So they use Kenyan shillings, Tanzanian shillings via mobile money to buy Bitcoin from us. For the most part, that facilitates e-commerce. You know, Africa only has 3% credit card penetration. I believe that's even lower in Kenya and Tanzania. So you really have no way of buying things online, even if you are young and tech savvy and have great internet access. So this is a very powerful way to access digital goods. So as you can imagine, you know, we follow AML KYC procedures. We require name, date of birth, address, and an ID scan. We cross-check that against politically exposed persons, sanctions, all of the same standard things that most money transmitters do. However, we do this voluntarily because we are not currently licensed in local African jurisdictions. That's because digital currency or Bitcoin is not currently regulated. It isn't considered legal tender. So we do not qualify for money transmitter licenses. That hasn't stopped us from registering with FinCEN, pursuing other international licenses, but at the moment, the best we can do in Africa is to work with local regulators to educate them, present Bitcoin and digital currency as a safe means of payment, and prove to them that we meet the standards of consumer protection that are required. So like I said, Bitcoin is similar to digital cash. Let's see, I've already presented the problem. So Bitcoin is similar to digital cash. We use it because it's free, it's open source, it's a low-cost way to accept payments and make payments around the world. For those of you familiar with the current state of mobile money in Africa, you'll know that interoperability between networks is a huge challenge, one that impedes the growth of digital payments. Bitcoin is the most popular form of digital currency, and it is inherently interoperable. It costs nothing to connect to Bitcoin because it's open source. It costs nothing to accept Bitcoin as a form of payment, to receive it in your wallet on a transaction per transaction basis. So by leveraging this digital currency, our business can connect to anyone who supports Bitcoin with virtually no integration required. Compare this to the integration with telcos or banks. A single telco can have up to a dozen different independent systems across the continent. So they aren't even interoperable within themselves, let alone with other companies or across other countries. So this is one of the reasons why digital infrastructure across the continent can be so daunting. Banks and telcos often don't have clear processes for integrations. They don't have open APIs that allow developers to link in with them. They don't have test environments. So the lag in digital infrastructure and lack of openness between operators means that there's an opportunity for digital currency to help jump ahead of some of these problems by acting as a highly efficient and affordable way to create interoperability. We hope to give our customers access to as many forms of payment as possible. Mobile money has revolutionized the financial sector in Kenya, but in other countries the uptake hasn't gained as much momentum, in a large part due to entrenched closed infrastructure. Our purpose is to connect Bitcoin to as many payment methods as possible so that those payment methods are easily accessible and interoperable to anyone who uses digital currency. Just to illustrate what I mean by interoperable and using digital currency to be interoperable, now that BitPesa has linked Bitcoin to Kenya's M-Pesa, anybody in the world, any digital currency exchange now has access to Kenyan payments without having to come to Kenya and integrate with the local telco or any local bank. So we are developing seamless transfer methods where the customer doesn't even have to see that digital currency is being used to effect the transfer. That'll be the next step in the sort of Bitcoin transfer generation, where digital currency exchanges are connecting directly to each other and the customer doesn't have to go through the process of touching the Bitcoin themselves. So Bitcoin will eventually be a back office function that allows operators around the world to connect. There are many barriers to reducing remittance costs, such as the lack of competition, exclusivity agreements, FX controls. I can go on and on. However, many of these issues are independent of technology-based solutions, and they need to be addressed in their own turn. So to summarize, by saying that to address technological barriers, digital currency is a new technology that has real potential to bring down the cost of remittance due to the open source nature of the code, which inherently enables an interoperable and efficient payment network. So I kept it short and sweet. Thank you.
Thank you very much. That very, very clear and timely presentation, I would say. So we will get back to you with questions after having heard Joyce. Yes, you need the click thing.
And then, are my slides?
We need to, yes. We'll need to load the slides too, yes.
So I'm going to dive a bit
more into the technology of things, but before we get into the tech,
There we go. Hello, everybody. Let's start again. So I'm going to talk a little bit more about the technology side of things, but before we get into the technology, I'm going to take us on a brief history lesson as well. But I am the executive director of a technology company, which is also a nonprofit. We're called Stellar.org, and we focus on extending financial services to everybody, including the poorest of the poor, by essentially building a common open platform for financial transactions. It's an open source network that allows financial institutions, governments, nonprofits, microfinance organizations to connect to each other in a Swift-like manner so that they become interoperable directly between themselves. We are not building services for consumers. We're building the back end. We are the infrastructure that all these great companies that you've seen today can connect to get Swift-like services between one another. So somebody had an earlier question today, why don't the great remittance companies that we saw on the last panel extend across the world? It's because it's hard and expensive to do that, but on a platform like Stellar, it becomes very easy for that to happen. We launched about a year ago, and since then, we have about 4 million accounts on the platform through various partnerships and people using it, mostly in Southeast Asia, but it's still early days. So I'm going to explain what Stellar is and the benefits it has to remittances, but I'm going to do it in the context of this question that you guys see in here. What is the impact of infrastructure on efficiency, right? That's one particular way of looking at infrastructure. So to start with this, what are we looking at? We've heard this term today used earlier. We're looking at silos. It could represent farming equipment. It could represent water storage. It's actually also representative of our financial infrastructure today. You can look at each of those silos and see things like PayPal or M-Pesa or Bcash or SEPA or ACH. It is very hard to hop from one of these networks to the other. And this actually leads to increased costs. The inefficient infrastructure that we have today leads to friction, and friction leads to increased costs and reduced opportunities, which makes it quite hard for creating a system that allows you to send small transactions of 5 cents or 10 cents. So when we think about this, we can think about other industries where we've had this problem, right? One particular case in point would be transportation. There once was a time when transportation was also separate and siloed. Here, since we're sitting in the United Nations today, you guys all ride the subway, or maybe rode the subway to get here. All the subway lines used to be different companies. And then they decided to make them interoperable. And today we have the New York City subway lines. They've decided to coalesce around one standard. There's another example that we can look at, which is mail. So if we look at the history of mail, it went from separate silos to an interoperable network. And that transition was initially courier services. If you were wealthy, you could hire your Pony Express to go send your message to somebody else. From there, we evolved to nationally interoperable systems known as the postal services. And in any given country, you could send mail to another country or domestically for a small fee. And then the next evolution of that is what's sitting on everybody's desks right now, your email. So now you can send a message to anybody instantly in the world at pretty much no cost, right? So we see this inevitable evolution from separate silos to participatory and networked systems. But then we're coming to probably the most impactful version that we've seen today, knowledge and information. There once was a time when if you wanted to learn about science or math or the arts, you had to have access to a university education and you had to have access to a library. And something changed all of that, the internet, right? The internet democratized access to knowledge. And with that now, anybody can learn how a plane flies or what makes the sun rise every morning. And this is something that was actually inconceivable just a few decades past. To give actually a really fun history example that I learned when I was kind of thinking about this slide today, before the internet was the internet, it was a series of disconnected intranets. Each company or institution had their own ability to share information locally. And then somebody came up with the idea, or actually many people came up with the idea of what is known as the internet today, and connected all of these systems into an interoperable network. And when you look at some of the earliest writings of the internet, there was a memo from ARPA in the 1960s, and this is a quote from the memo. The writer imagined as an electronic commons open to all. And this electronic commons was meant to be the main and essential medium of informational interaction for governments, institutions, corporations, and individuals. And he called this network the Galactic Network. The Galactic Network. And that's not why we're called Stellar, but it's pretty fitting. So now we're going to talk about the future. We've had our introduction to the historical evolution away from silos towards networked participatory networks. How does this impact remittances? How can our financial transactions keep up with our migratory lives today? There's probably not a single person in this room that has only stayed in one country their entire lives. Things have changed, and our financial capabilities have to change with our lives. So this is where we get technical, so you guys really want to pay attention now. So Stellar functions on 3 levels, and the basic level is the network, right? There are servers on the Stellar network that keep the system functioning and safe. Anybody can run one of these servers, and each of these servers contains the shared database of all of the accounts on the network. So each of these servers holds the complete snapshot of everybody's balances and transactions. The servers then stay in sync with each other via a method known as consensus, and this is kind of like the very new tech thing here. Consensus is cryptographically secure. It is a way to figure out how do we agree on this database when you don't know how many people are voting in that particular round. So we developed a system that allows us to do that. And what you're looking at here is actually, that's it. That's the Stellar network. It's that simple on its base level. Where it gets really interesting is the next level up. This is kind of where the magic happens. How do other people connect to this network of servers? So one level up from that are gateways. Gateways are essentially entities that can accept deposits and record them into the network, or issue credits to users to a particular account in the system. Remember, the system is still that shared database structure. And the gateways in Stellar are similar to what websites are to the internet. The internet is a core protocol, and the websites are built on top of it as ways for people to interact with the internet. And gateways are the ways people interact with this financial protocol. Anybody can be a gateway, but if you are interacting with money, you should be a licensed organization like a bank or a remittance company or a microfinance organization. If it's not currency, then you can actually be anybody. You can be any kind of gateway. So when you think, what would be a gateway that's non-currency, some examples that we've seen are prepaid mobile minutes, because mobile minutes credits are actually currency-like in a lot of countries. Loyalty points, your airline miles, are non-currency credits that people accumulate, and food rations in refugee camps. Right? Those are all things that are very important to track on a per-person basis, and all of them can be brought into the network. And this is actually how Stellar lets databases that are otherwise not compatible with each other to communicate with each other in an efficient manner. So then the next level up from that is users and services. These are all developed at the local level. And if you think that this looks a lot like the internet, it does. It's intentional. Right? We are designing financial services to behave a lot more like the internet. We need to reach more people. And the reality is that banking has been around for millennia, and the internet and mobile services have only been around for 40, 50, 60 years. And the mobile services and the internet already reach more people than banking. Right? So let's think of new architecture systems that will allow us to do the same. So how does this work for remittances? How do we send money around the world? I'm going to use the example of British pounds to Nigerian naira. Imagine that you have a person named Alex who lives in the UK, and he wants to send £5 to his sister Belle who lives in Nigeria, and only needs £5. Maybe it's a case where there's an emergency medical situation where they just need to buy a little bit of medicine, not a huge remittance amount, but a small remittance amount. So what Alex does is he goes to his remittance company, and if his remittance company is connected to Stellar, then the remittance company is able to transmit the £5 to the network. So a couple of things I want you to note as I go through this example. It is cross-border, it is cross-currency, and it is a small amount. In Silicon Valley, we call it a microtransaction. Everywhere else, we call it a transaction. So, the amount is to be honest, should be irrelevant to how we think about these solutions. So if his remittance company is already connected to the network, he transmits the £5 to the network. And then what happens is inside of Stellar, there is an internal peer-to-peer currency exchange where the world's transactions are freely available to everybody else. The network looks for what is essentially the best rate and trades the pounds for the naira. So this creates a flatter marketplace and more efficient rates. From here, the £5 is converted into roughly 1,540 naira, which would be the market rate, and Belle's mobile money provider could receive that and then sends it to her digital wallet in 10 seconds or less. So what Stellar does is it effectively moves £5 to 2 naira across border, across currency in less than 10 seconds. The fees don't really exist in the network. There is a small micro fee that is essentially eaten by the network as a DOS protection, it's an anti-spam methodology. The cost for that is 1 penny will essentially get you 300,000 transactions. So it's fairly irrelevant. If you have to pay 1 penny to prepay for 300,000 transactions, I think it's a good deal. So what happens here then? Note that also what Stellar does is it makes any currency into a digital currency. So it brings the benefits of Bitcoin to the dollar, to the naira, to the pound, to the peso, to any currency that you want, because it's what the gateways then deposit into the network themselves. So what about KYC? How does KYC work in here? Every gateway is able to flag a setting where they can say, if this user is KYC'd, then I will allow my transaction to flow to that person. So if Alex tries to send the transaction to Zenny who is not KYC'd, the network will automatically reject the transaction and the transaction will fail. So it allows that remittance company on the front end to decide who is able to access it on the other end. So that's it in a nutshell. This is essentially how we work to create a unified system that connects the world's 180 currencies in about 2 to 5 seconds. You can go across any currency. Any company can plug in. So it can be a mobile money company, a bank, a remittance company, BitPesa, Globe One. All of these folks become interoperable on this platform. One use case that I was thinking about hearing everybody talk is the idea of, I've been hearing in the UN refugee camps, there's now debit cards that are being issued, which I think is fascinating. If the debit card system was attached to Stellar and people's home bank accounts were attached to Stellar, then they would actually be able to access their home funds and not be as separated from their economic resources. A potential use case that could work in these situations. So who can use Stellar? We are an open network. There is no membership. It's like TCP/IP for the internet. Who can use the internet? Who decides who can use the internet? That's not for us to decide. That's for the world to decide. So people that have been interested in it are financial institutions, banks, microfinance organizations, farmers co-ops, governments, NGOs, obviously a lot of startups, nonprofits, and community groups. And one example that I wanted to kind of show that was interesting is it allows any company that connects to have the potential ability to transact with any other company, which means somebody in the UAE can then decide to start transacting with Europe because Europe is already on the network, or said currency is already on the network. So I wanted to kind of get to closing with one example of a project that's happening on the Stellar network. In South Africa, we're working with an amazing nonprofit down there known as Pray Kelt Foundation, and they're working on creating mobile savings accounts for girls on feature phones where the girls are able to deposit cash or airtime. And they're able to then save airtime as a savings account. And the amazing thing is that the purpose of this program is actually not necessarily to provide the girls with lots of savings, but to keep them in school for 1 more year. Because financial access is the conduit to getting people towards better life and results. So this is one of the projects that we're working on. It focuses a lot on digital financial literacy as we talk about crossing the digital divide. How do we get large swaths of communities more comfortable with digital financial services? And Pray Kelt is starting with girls in school, trying to keep them in school by feeling economically empowered with an independent identity. So I often get asked, why is Stellar a nonprofit? Coming from Silicon Valley, it's not something you typically see. We decided to become a nonprofit because this is actually really important. This type of infrastructure should be owned by everybody, and it should be owned by nobody, just like the internet is today. And that's why we chose to be a not-for-profit. If we had taken any other path, it would lead to a very different future. What if the internet was owned by a company? Right? Like what would our world look like today if it was a proprietary technology? So we made the choice to be a nonprofit and to make everything open source. So that is why Stellar is a not-for-profit. So I just like to say, if this has triggered any use cases or questions that you guys may have, please feel free to reach out. I urge you all to not sit by and watch this happen. You guys should all lead, and I think we actually do have a room full of leaders here. So thank you for having us.
Thank you very much, Joyce, for this interesting presentation and examples of what you are doing, so that the rest of us could also possibly understand a little bit. But I'm sure that there will be questions on that. Before I open the floor, I would also actually like to ask Amy if you could demonstrate a little bit BitPesa in action, so that give an example of how it works also by sending money.
Yeah, absolutely. So
that would be great. Yeah.
Pull up our website. Okay, while we're setting it up, is there anyone in the room who has M-Pesa? It's a very international. You do? In your card? Perfect. M-Pesa. So I'm going to M-Pesa. Oh, okay. Unfortunately, I have my U.S. SIM card in. Otherwise, we could do the whole thing end to end. But a whopping
we're setting it up now. So
a whopping $2. So I'm going to send Bitcoin, convert it to M-Pesa. Yeah, exactly. Yeah.
Okay. I'll have to just see if I can connect to the internet, right? Down? No.
You can closely watch her password and account number.
Yeah. That's right. You'll actually see all the extra security measures we have.
UN Wi-Fi.
Yeah, my dear. Give me.
And if anyone is really interested, there is free Wi-Fi here. You can download a Bitcoin wallet in just a few seconds. I mean, just go to the Play Store, iTunes Store, whatever it is, and look for Bitcoin wallet. There are hundreds of them, and they're all free.
Yeah.
Okay. Do you have a favorite wallet, Joyce?
No, all my Bitcoins are cold storage. But they're too easy to lose, so.
They can send you.
Why isn't it the coolest way?
Huh? It's very hot in Africa. Okay, I'm not sure why the page isn't loading. Completely, but let's see. Let's see if I can remember my password. Now, for those of you who aren't familiar with two-factor, the whole purpose is you have to steal the password and the phone. So. For some reason, we're really struggling to load here. All right.
No, it's no.
Yeah, it keeps refreshing.
No. You can just use computer.
Let's use Chrome.
So this gives everybody else the time to think about really sharp questions that you want to put
maybe we
to
can
them.
even gather questions in the meantime. That's slowing things
Yeah,
down.
maybe we should do that. If
Okay,
Should we give it another? Yeah, you're on.
While she's doing that, can I ask a question?
Of course. Yes, maybe we should then.
Oh, you know what, I just got it.
Are you ready to go
I'm
now?
ready,
Then
I'm
you
ready.
will not ask a question, Dilip. I will give the floor back to Amy.
All right, so this is the site. I mean, this isn't going to be too elaborate. 'Cause actually, our whole site is pretty simple. But you can see on the side, I have all my contacts. Now, this is after I've signed up for the platform. So as you can imagine, the very first time you sign in, you have to provide all of your basic KYC and upload a passport scan, which we verify. So you can see I actually pay for a lot of things through our platform, not to plug it, but pay my dry cleaners. You know, I pay a lot of people. So, so I would add someone new if anyone in here had M-Pesa, and I could send them money. But since that isn't the case, I'll just send money to myself, which again I do quite a bit. So my information on the left, that contact, is stored. I can add a new contact if I wanted to, but really all we need for a contact is name. Name and email address aren't even required. Really all you need is a phone number. And that's because in Kenya and Tanzania, as some of you probably already know, KYC is required when you register for a SIM card. So KYC on the beneficiary side is already taken care of. So I'll send myself some money, just 200 shillings, that's about $2. You can see it's pretty simple and instant. It says if you want to send 200 shillings, you pay 0.0086 Bitcoin, and the recipient will receive 200 shillings. So the way we do our pricing is we take the absolute best foreign exchange rate we can possibly find, and then we mark it up by 3%. No flat fees. It's always 3%. So if you're sending very small transactions, obviously it's extremely cost effective. So I click accept the price, and now what I see is this is my wallet. It's like my bank account instructions. So what I'm asking the sender to do is to send Bitcoin to this address. You can do that a few different ways. There are wallets you can have on your computer, but I'm going to use my phone wallet. So I have exactly $5.26 worth of Bitcoin on my phone, thankfully. So what I can do is, if this were on my computer, I would copy and paste this address. But since I have it on my phone, what I'm going to do is I'm going to take a picture. So have this camera setting. I'm going to take a picture of this QR code on the screen here. So the moment I took that picture, it's already populated the information. It pulls the address and the amount, 0.0086, a really tiny amount. So all I do is click send, confirm, yes. Okay, my phone tells me it was a success, and hopefully pretty soon our website, and it was a success. So I could have been in China, and we're sitting in Kenya, and that's how fast I can accept money. And it isn't just that money I've received a notification. That money is genuinely in BitPesa's account. It's ours. So it doesn't matter how tiny the transaction is. We don't have to wait 2 days for a SWIFT transfer. We don't have to wait a day for a payment processor to credit our bank account. This is credit risk free. The moment we receive the Bitcoin, it's ours. It's like cash. So that's kind of cool. If I had my Kenyan SIM in, I would have received a message by now saying that I received 200 shillings worth of M-Pesa. So yeah, that's it. That's the demo. It's pretty simple.
Thank you very much, Amy, for that demonstration. And I think with that, we can open the floor for questions from the audience. I know that Dilip wanted to put a question. No? Okay, he doesn't. Please.
Hello. Okay, so electronic money transfer. I'm just wondering, how is it possible for the central bank to keep record of this? Because when someone is sending money, it comes to hits our balance of payment and eventually foreign currency reserve. So electronic money, how does the central bank keep record of this?
Thank you very much. I'll gather a few questions and then I'll let you answer. So I saw Christoph Thomas, please.
Thank you very much for a very interesting presentation. I just have some very practical
questions how you would market this service to people in rural areas or people who generally don't have any experiences of mobile phone technology or banking services. And if you compare with M-Pesa and the relatively quick success they experienced in Kenya, how would you describe that? What kind of strategy is behind that kind of success in a short time? Thanks.
Thank you. And then I saw John Bingham. Please.
Yeah, I just wanted to ask you both, if I could, to react to a sentence that's in the migration development brief from the World Bank. It's a sentence that says, concerns over money laundering are keeping costs high by increasing compliance costs for commercial banks and money transfer operators and delaying the entry of new players in the use of mobile technology. I'm just a little bit lost on how this can move so quickly and so cheaply, and the rest of the system seems blocked by regulators.
Thank you, John. I'll take one more question from you, please, and then we'll gather another round after that. Thank you.
To both Amy and Joyce, what are the risks? What about information security? What's being done about that? And with Joyce in particular, so what's the revenue model that you? I mean, how do you? I know you are a non-profit; you don't make money, but you maintain. How do you pay for your existence?
You want to copy the model? That's an important and good question. So, shall we start with you, Joyce, and then I'll give the floor to
Yes. Do you
Amy.
want me to answer all of them, or
The ones that you find relevant for your presentation, please go ahead. You can choose here.
All right. So the answers for the first question about the central banks, it'll be a little bit different for the Stellar network than for pure Bitcoin. With Stellar, the local currencies are brought on board via these gateway entities, and gateway entities are domiciled in a jurisdiction. They are accepting local currency deposits, so there is no requirement to use an alternative currency, right? They can stay in whatever the currency is. It just happens to have a digital record of it. So that gateway still has to comply with all local regulations and would still fit into the existing system. So Stellar is not necessarily a wholesale replacement of what's there. It's about making what's there interoperable, and that interoperability allows for greater flexibility so that people can start adding services to kind of closer to the base of the pyramid level of community development, right? So it's actually pretty much the same as regular money in Stellar in that sense. In terms of the how do we market to rural areas, since we're a back-end service, we're just infrastructure that other people can build to. It's up to, we see a lot of local services starting to integrate with us, and they already have existing networks. So what they have are communities that they're serving, they're just trying to serve them better. Right? So a case in point would be we're doing another project in Nigeria with microfinance organizations, and what the microfinance organizations are asking for is an ability to transact with each other in a SWIFT-like manner, because they have most of their, like a lot of the young folks live in Lagos and send money home to the rural areas. There's microfinance organizations in both communities, but those microfinance organizations cannot transact with each other. There's no way of sending, so they're trying to use Stellar to do that back-end connection. So for us, it's not so much about marketing to a new audience. It's about serving who's there through organizations that are already in the market, that already have community trust, a good reputation, things that are also required for financial services that are more softer. So that's kind of where we fit in. Let's see here. In terms of the risks, the info security, are you talking about the actual payments, or are you talking about the identity side of things?
The fact that you have a network and how secure it is.
Right. So both Bitcoin and Stellar are cryptographically, they're built on very well-defined cryptographic principles. So the actual protocols are to break them, you'd pretty much break a lot of other things that rule our technology lives. Where the true attack vectors are, from a security perspective, are the companies that interface with these protocols. It's like typically the website administrator that has servers that are left unprotected on that level. So that's where people typically do the attacks. That is on the service level, not on the protocol level, right? And for that, you have to trust where you put your money, right? Like that's why we put our money in Chase Bank instead of, I don't know, mybank.net. I don't know if there's a mybank.net. If there is, I'm sorry. But we choose to bank with or deposit our money with places that are secure, that have those teams. In terms of our revenue model, we are doing things like foundation grants, and we started off with essentially $3 million from a payments startup in Silicon Valley that believed that this type of technology needs to exist. So we are starting off with that, and then from there, foundation grants.
Just one more comment on the central bank monitoring. At least for our case and for the case of most exchanges, there's always going to be a fiat traditional transaction tied to every transaction. So every transaction we do is inherently traceable by the central bank. And if we then send money out of the country, that's still done through a traditional banking structure. So part of what our business is we still interact with the traditional banking infrastructure. We just make it a little bit more simple for the clients in terms of interacting and sending small amounts of money. So we spare them the having to work with banks in that regard.
Every transaction is recorded through the central bank.
Well, every transaction is recorded through M-Pesa, which is then reported to the central bank. Exactly. Because every transaction is M-Pesa in exchange for Bitcoin or Bitcoin in exchange for M-Pesa. So there's always M-Pesa or Tanzanian shilling, whatever it is in the local jurisdiction. There's always a traditional money component. Right. And then how to market to rural areas. Yeah, that's a good question. Well, you can probably see, some of the people I have on this list. I've got water delivery. She operates a hotel. I had my dry cleaners on there. I have a lot of friends. So none of these people have any idea that Bitcoin was involved in the transaction. All they receive is M-Pesa on their phone. So only the sender needs to know what Bitcoin or digital currency is, and eventually they won't even need to know that. They'll just log on to their local Bitcoin exchange and send M-Pesa directly. The Bitcoin will just happen between us and the other digital currency exchange. So, in terms of, overcoming rural education, half the battle is already won because only the sender needs to know what's going on, if that answers the question. And obviously we have a marketing team that's on the ground educating people all day, every day. So. All right, and then the cost of compliance, that's a really great question. So part of the reason we were able to launch so quickly is because, like I said, we aren't licensed locally in Africa. Obviously, we know the central bankers intimately well. We are in very close communication with them. They know everything we're doing, and we actually send them regular reports. However, we didn't have to go through the licensing process, so that was a cost and time savings. However, we have been inhibited in being able to transact in the U.S. So we currently do not solicit U.S. customers because the U.S. is the only country in the world that currently regulates Bitcoin businesses. And by that, I mean Bitcoin exchanges are considered money transmitters, which means you have to get 50 licenses across 50 states. It might be something like 44, I don't know. Yeah, 47. Yeah, so there are a few states that don't care. But it's an insurmountable cost at our current size and scale. Obviously, it's something we will address at some point in the future as we grow, but right now the market's big enough elsewhere. But it does inhibit our ability to do business, especially in a country with great internet access and everyone's internet savvy and familiar with digital payments. So, it's difficult to have to set that market aside for now.
Thank you very much. And we can go for another round. I had already IOM, Mr. Al-Noor.
Thank you for interesting presentations. Thank you for interesting presentations that I'm still trying to digest. Listening to what you told us, I could see that both technologies are comparable in the sense that the way they both function is across border, across currency, and that you seek to do business on low cost and make it affordable to whoever is interested. But on the other hand, you seem to be facing also common challenges, especially when it comes to risk management and how you do that. the legal framework, and if there is any differences or disagreement, how the arbitration could work, and then how you would sell this or promote it or make it friendly, user-friendly to the people that they need really to use this technology. I think this is the common challenges that both technologies face, and it would be good to hear your perspective and different point of views on both. And one point that I would like to add, since January last year, in Kenya, the Kenyan government hosted the African Institute for Remittances. This is an institute that has been launched under the auspices of the African Union and with a mission to make technologies available and innovative approaches in order to reduce the cost of remittances, make it safe, and maybe they could be interested in getting to know about what you have and maybe help in the application of that at a continental-wide scale. This is some suggestions that I would like to share. Thank you.
Thank you very much. And then I think that Dilip had a question. Yes, and you too, Sonia. You will. Dilip, go ahead.
Okay. I have first a question for Stella. Joyce, I would like to know, you are a backup function, but how, in which countries and how the convertibility? Because you said that you operate in local currency through an institution. Could you explain a little bit more, because it was not clear on that? Is Stellar's, or is Stellar Bitcoin, or is how the local currency? And I wanted to ask to Amy, given that we have here central bank governors, we have chief economists from central banks, I would like to see, what you would like to see as not the best practice, but ideal in the world as a regulatory framework, or what will be three things that you would like to see in the regulatory framework, or what the central banks or the Minister of Finance should take into consideration so we can take advantage of Bitcoin, and transfer and remittances. That's okay.
Thank you. Then please, Dilip.
Thank you, Eva. I think it's an excellent presentation, and I saw the demo of BitPesa, as I mentioned yesterday, from Elizabeth last week, and I was really impressed that she managed to create my mobile wallet and Bitcoin wallet, and then send me $2 worth of Kenyan shillings from her Nairobi account, and that cost 1 penny, and I sent her back the 1.99 to her from the World Bank in the Atrium Cafe to her Nairobi account, and she got 1.98 cents. It all took 10 minutes for her transaction to settle, and then another 10 minutes for my transaction to go back to her. So we did all of that during the course of a coffee at a cost of 2 cents. And as I mentioned yesterday, the cost of sending $2 worth of $2 from anywhere to anywhere internationally is minimum $10 or maybe $5 in some cases, or somewhere around that. So basically, small remittances under $10 are just not imaginable in the case of international remittances. And I was quite struck by that. So operationally speaking, one issue that used to worry me was the exchange rate fluctuation. And if it takes no time, then there is no fluctuation by definition. So in that sense, that's not a worry. Fraud was another worry in my mind, and there I have begun to have a sense of confidence that the programs are quite stable and not easy to break in. In fact, it might be easier to break into a bank vault than to these programs. That's what I have been told. That's a remarkable feature. The third feature that I have come to appreciate more is the blockchain and the public registry of the transactions. And there, I'm now beginning to make a speech here, sorry, Eva, but I thought it would be worth pointing out in terms of gap filling of the information that I have learned over the last 4 to 5 months. In the Bitcoin blockchain technology, for which virtual currency and money transfer is one application, but there are many other kind of applications that one can think of. every transaction is recorded, and you can probably write it in the program that, what if you had a situation when you gave, let's say, $1 million to Nepal earthquake now to a charity, and the charity, the guys who received on the other side decided to buy a Mercedes instead, a car. And what if the money you gave sort of said at the time of the point of contact, when the money is given to the Mercedes dealer, the money says, no, I won't buy that for you. That is the equivalent that I see of blockchain application. I don't know if you got that message across. It's not like somebody else is telling you that you can't do it. The money itself basically says you can't do it. It is password protected. It is protected against these transactions. It only allows these transactions. That's what I understood as the technical feasibility of the blockchain technology right now. It can do that, and I see a lot of applications in the aid and charity domain, where you can literally say that this aid is for building that bridge or that road or that airport or buying that sack of rice and nothing else. And you can then send a report back as well. It is all there in the registry. So these are some of the characteristics that I was really taken by, and it all comes at a very cheap cost, almost no cost. I mean, of course, there's a fixed investment, but apparently the fixed investment of building the virtual currency that is customized to your purpose is not as high as it seems. So these are some of the things that I was really taken by. So now I would like to ask a very simple question to both of you, but these are two separate questions to each of you. So, Joyce, what is the difference between, in your mind, Stellar and BitPesa? And to you, what is the difference between BitPesa and Stellar?
Yes, I'll take one more question over there, please. I'm sorry for pointing. I don't see your sign, please.
I'm French speaking. I don't know if I can speak French or to speak English, and I say it's not good English.
I would like to ask you to please try in English because we don't have any interpretation.
Okay, thank you.
Yeah, thank you.
Yeah, it's better for me. Voilà, donc je vous remercie. Moi, je suis du Sénégal.
Thank you all. I've come from Senegal.
Et peut-être c'est une chance pour vous que je sois ici parce que je vis au Sénégal et que la plupart des programmes qu'ils exposent ici sont orientés vers les pays de l'Afrique.
So I'm happy to be here, and especially because many programs that are presented here today are oriented towards Africa.
Ok, donc moi, en tant qu'Africain et destinataire de ces programmes,
as African and recipient of these programs,
je ne vois aucune différence entre les différents procédés d'envoi d'argent entre l'Europe et l'Afrique.
I think that every programs are basically the same and have common points.
Parce que le premier système que nous avons connu, c'est Western Union.
The first system we knew was Western Union.
Et tous les programmes sont basés peut-être sur cette base.
And all the programs we have seen today are based on this system.
Ok. Et tout ce que nous avons, l'intérêt des programmes qu'ils développent ici pour ceux qui reçoivent l'argent, je pense que c'est la facilité pour la récupération qui doit être leur objectif.
The key objective that all these programs have to reach, and the key goal they have to reach, is the easiness for recipients to get their money.
Parce que les gens qui reçoivent, leur problème, c'est pas celui qui envoie combien il paye de taxes. mais la manière dont, la facilité qu'il a pour récupérer son argent dans la journée ou bien même si c'est dans le week-end.
Because for the recipient, he doesn't care about the costs of remittances, about how much the sender has paid. He cares about how quick and easy he can get his remittance.
Et il faut aussi qu'il sache que tous ces systèmes-là ont été piratés. Tous les systèmes qu'ils ont utilisés ici ont été piratés.
You also all have to know that all the systems that you've presented today have been done in another way, informally.
Il y a beaucoup de gens qui sont parvenus à percer le système de sécurité.
And also hackers have managed to go through their security systems.
Parce que souvent c'est basé sur le nom et un numéro de code.
Because often it's based on the name on the ID card and a code.
Et souvent dans nos pays nous avons, vous dites Mamadou Ndiaye. You can get 10 or 11 Mamadou Ndiaye.
And often in our countries like Senegal, if you're called Mamadou Ndiaye, then there's several hundreds and even thousands of Mamadou Ndiaye.
Yeah. If you get a code, you go. Quelqu'un s'il a le code, il va directement à la banque. C'est pas souvent des banques, mais c'est des agences qui sont dédiées et ils reçoivent l'argent. Le véritable destinataire vient, on lui dit que l'argent est déjà retiré.
So if someone gets the code and goes to take the money in the cash out agency, he just gets the money, and the true recipient, if he arrives too late, then he won't get the money.
Okay. Et aussi, nous avons aussi les agences qui sont dédiées, leurs correspondants dans les pays. Souvent, ce ne sont pas des banques, parce que les banques, je sais qu'ils leur font payer cher. Ils vont dans des structures de finance, qui souvent n'ont pas l'argent à disposition tout le temps.
So often the recipients don't go to local banks, they go to cash out agencies that run out of money quite easily.
Okay. Quand vous venez avec votre code et tout, ils vous disent que le code n'est pas bon.
They just tell you that the code is not good.
Yeah. Pour gagner du temps. Et je crois que ça, c'est ce qu'ils devaient faire pour ces problèmes de système, ces systèmes de transfert. Actuellement, par exemple au Sénégal, nous avons au moins 10 systèmes qui sont locaux. C'est des systèmes locaux qui sont traités par des Sénégalais et qui nous permettent tout le temps, aujourd'hui, même si tu veux envoyer 1000 francs, tu ne te déplaces pas.
So what's the most efficient for, as for Senegal, as example, is there local systems that are developed locally by Senegalese people to make sure that you can have your money easily and quickly through their local systems. Okay.
Donc c'est la contribution que je voulais leur donner.
So this is what I wanted to say today.
Thank you very much for not only for your question but also for your description about the situation. I have now 4 different questions for you to address, parts of them that you want to address, and then I still have 3 more questions after that, and that's it. So I will come back to you who are waving now, and but I'll let you so it doesn't get to be too difficult to handle. Please.
So the answers to actually the first 3 questions is actually quite similar. Like, what are the common challenges? How are they different? What are the risks that we see? So I would say that actually there's BitPes is a service that's built on top of Bitcoin, right? So there's this layered cake that we're about to see. Bitcoin is a currency and a protocol. They have so then rather than say Stellar and BitPesa, it would actually be more equivalent to say Stellar and Bitcoin, right? Because BitPesa is probably actually one of my favorite companies building on the Bitcoin protocol. Stellar and Bitcoin are orthogonal to each other. They have different purposes. So on some level, Stellar sits on top of Bitcoin and on top of dollars and on top of pesos and on top of everything to make them interoperable with each other. What Bitcoin's core focus is that it is a store of value, and it is a way to send that store of value. That store of value on the Bitcoin protocol is the Bitcoin currency itself. So it's a little troublesome because they're named the same thing. So it's a little bit confusing for folks, but they are different purposes. So Bitcoin is a transport mechanism for Bitcoins, and Stellar's goal is to make everything interoperable, make Bitcoins interoperable with dollars, with Visa, with Bcash, or with whatever the case may be. And as we had the benefit of starting a little bit later than Bitcoin. In fact, our CTO, who's sitting here with us today, he's quite well known in the Bitcoin space. He made the first Bitcoin exchange. He's always on the list of who made Bitcoin, but it's not him. If it was, he probably wouldn't be allowed to have entered the building. But so Jed McCaleb is sitting over there with us. And when Jed started to architect the system, there were a number of things that we thought about regards to Bitcoin and what it was really good at. And it's really good at providing this kind of like open way of moving Bitcoins around. There were certain challenges that we saw as we moved into the developing world. And since then, companies like BitPesa are doing a really good job of mediating some of these risks. But these risks are core to the Bitcoin protocol when we're talking about communities that don't have a lot of money. And what those are that we see is that for a Bitcoin transaction to be confirmed, you have to wait for what is known as a block to be mined, and it takes about 6 to 10 minutes. So you guys are showing it as instant, but you're bearing the risk for that. Yeah. So the Bitcoin protocol recommends that you wait for 6 blocks for a fully verified transaction, which is about 1 hour. So BitPesa is taking on that risk and that currency risk themselves. But if you did not have an intermediary like BitPesa, then the user has to kind of wait for that hour for that confirmation to happen. The other thing is that built into the protocol for Bitcoin is a fee that when you look at the writings by one of the core developers, he recommends a 20-cent fee per transaction on a mining level, which I think you guys are also bearing that as well. If there's not an intermediary bearing it, it goes on to the user. And 20 cents per transaction is not realistic in a lot of places in the world where we're looking at. Especially if you're dealing with a $2 a day community, 20 cents is 10% of their income. And then the other thing is that when you're in Bitcoin, there are significant currency volatility, like this exchange rate issue that you were mentioning. Twice in my life, I've seen Bitcoin drop 30% in half an hour, right? And that's not a risk that I would feel comfortable putting onto a community that is underserved. So when we looked at these things, we thought, well, how can we work? We're heavily inspired by Bitcoin. We want to make Bitcoin interoperable for a lot of things. I think Bitcoin works really well for the US and Europe and a lot of these situations where people aren't as sensitive to those edge cases, right? But those edge cases are quite important for the communities that we all look at around the world. So we designed certain elements of the Stellar protocol to alleviate that. Number one is that you can function in local currency, right? So what does that mean? There was a question over here. What does it mean to bring local currency on? Stellar at its core is a database system. So then if you are a remittance company that functions in dollars and peso, you are just using the Stellar database to record your dollars and pesos. So there is no alternative currency. You're actually just functioning in dollars and pesos. The same way when you deposit money in PayPal, $10 shows up on your screen for your $10 deposit. It's still dollars. It's just a digital record now. So that's how you stay in local currency. And when you're doing dollar to peso, euro to pound, pound to rupee, the currency volatility there doesn't really exist because you're just looking at an exchange rate, not a volatile system. And then, we designed the Stellar network to settle faster. So 2 to 5 seconds is what it should be. I say 10 seconds because internet lag is internet lag, and we can't make the internet move faster. But we do believe that speed helps with the other types of risks. And then, as I mentioned before, a transaction fee, instead of being 20 cents per transaction, it's 300,000 transactions per penny, right? So it's a different scale on that. What I think is that when we look at the evolution of these things, Bitcoin will work really well for a lot of these advanced use cases that you're talking about. And I'm really excited to see a lot of those come forward. Stellar, we're a lot more focused on making things interoperable and making them interoperable in a way that makes sense, economic sense for the developing world, right? A lot of these more futuristic smart contracts will be important later, but it doesn't address the healthcare, education, like base level issues that we focus on at Stellar. And then the comment that you had about these systems exist, you're exactly right. You were mentioning about the names. So I'm Korean. My last name is Kim. If you know a Korean, chances are you also know another Kim, right? So we have a lot of people with the same name in our communities as well. I do think it's really important to be able to mimic local cultures and local traditions in our financial systems because money is culture. How each of us split a bill will vary depending on where we're standing in the world, right? So we designed Stellar to let people build what their local services are into the protocol. And at its core, if you remember that remittance kind of path, it's essentially digital hawala, right? When you think about how the network behaves, it becomes that hawala system for everybody that's in there, and it allows for certainly a significant diversity of services that can be built on top of it. And then to get to that last point that the gentleman brought up, how do we make it easy to use? How do we make it make sense? I didn't talk about it a lot in this presentation. I focused on the technology, but about half of my team is focused on an education program. We are an educational not-for-profit and tech not-for-profit. The educational program is focused on making people comfortable with digital financial services, because what we've learned is that there are huge security risks when people are not comfortable with this. I bet you there's probably more than one person in this room right now that has the word password as a password somewhere in their lives. And as we move into environments where people are not as digitally connected as us, we have to teach and share good security practices. So we actually have an entire educational program focused around how do we walk people through account creation, send, receive, and secure their account. And we actually incentivize people with small amounts of digital currency, like nano scholarships. And the idea is that people can afford to lose this stuff that they don't know what it is yet, but I don't want them to risk it with their own money that's in their own currency that they are used to using. So we just basically are developing these systems that will help people become more fluent with the platforms. And what we've learned through our conversations with organizations like the Gates Foundation is that without education, people don't use the tools that are accessible to them. But education is not just telling people once, it's repeated exposure to a platform. And there are significant gender issues involved with that. Women are more likely to give their SIM card to an agent with their password. Men are less likely to do that, partially because women have less access to the device themselves, right? It's not their feature phone, it's somebody else's. So they will give their SIM card to the agent. We have to think about these issues as we design these educational programs. So it's not just the tools, it's how do we become smart as a global community on these topics, and that's what half of our team focuses on.
Thank you very much for that, Joyce. Please, Amy, do you want to respond?
Yeah, sure. Well, as to the first question, what are the risks? And you're right. I mean, there are so many common issues amongst all money transmitters, some that we are not immune to. We have the same liquidity issues as Western Union. We have the same marketing challenges as Stellar or any other startup company. Informing people about our product and getting them comfortable with it and using it are of course challenges. So we do that the same way traditional companies deal with these things. We have very strict liquidity procedures. All of our transactions are prepaid, as you can imagine. I mean, there's no way I'm sending a bank transfer instantly. So all of our transactions are prepaid, and we have to manage that liquidity. That's my job full time. So, addressing those challenges it's very traditional approaches. Where we are innovative is cutting out half of our cost structure by applying Bitcoin technology as a payment mechanism on exactly half of every transaction, which is it's innovative, but it's also good business sense. It costs us nothing to accept Bitcoin, and it costs us almost nothing to integrate with Bitcoin. So I would say, but in terms of the traditional challenges, I don't think there's anything totally revolutionary there. BitPassive versus Stellar, I think Joyce summed it up pretty well. I guess just looking at all your graphs, if anything, we would be one of the nodes, right? So we would be a node, and they're the whole network. So, and hopefully one day that happens. And then regulatory best practice. So that's a great question. It's really difficult to answer because so many different countries are working towards this and have stated opinions, and they're varied. Some countries are stating that Bitcoin is a commodity. Some are stating that it should be considered legal tender. Some are applying VAT. Some aren't. So best practices, there are think tanks working on that. There are not-for-profit legal groups working on that. Hopefully, some better sort of white papers and best practice articles are published. There certainly are a handful out there. I think the United States made a great step in the right direction in that Bitcoin businesses are money transmission businesses. Our company should be regulated like a money transmitter. Unfortunately, we don't fall exactly in that framework right now, but we are treating ourselves exactly as though we are. We have exactly the currency reserves we need in every currency. We follow the same KYC and AML procedures. We keep track of transactions and are prepared to file suspicious activity reports. So we treat ourselves as though we are under a traditional money transmission license. And I think that's probably best practice across the board until there's more Bitcoin education amongst regulators. And then finally, thank you so much for sharing all of your experiences. I have shared many of those too because I've had to cash out my M-Pesa and gone to 4 different booths before I find one with enough cash. And I'm not talking a lot. I mean, sometimes it's as little as $10. They're just out of money all the time. So I know. I mean, it's a constant struggle in every country we operate in. But those are the traditional networks that we have to build on top of because that's what people use. In Kenya, there are 85,000 M-Pesa agents. We don't have the resources to open up 85,000 booths and hire 85,000 agents to distribute our product. So, of course, we leverage existing networks. I live in Kenya. This is my business. So I know that big strides are being made in improving those procedures, but whether they'll be perfect tomorrow, of course, all these things take time. But you asked a good question about KYC. So in Kenya and Tanzania, that problem is actually addressed very well in that SIM cards are registered to a national ID. So not just a name, generic Kenyan name, maybe Brian Kamani. It's a very common name, so there are lots of Brian Kamanis out there, but your SIM card is registered to your national ID number. So it isn't just Brian Kamani, it's Brian Kamani 123456. And when you cash out at an M-Pesa booth, you have to show your ID with that number. So that's how they get around that. And I realize that doesn't apply to all countries. We are pushing into countries that don't have those luxuries. So there are other ways around it, and there are best practices, such as if a beneficiary doesn't have a registered ID, they can show a utility bill or some other form of identification, and when they present it, they are registered and put onto the system. So, it's baby steps, and it'll take a very long time for that to actually capture, huge portions of the population, but at least it's a step in the right direction in countries where they don't have the benefit of that mandatory SIM card registration. Let's see. Is there anything else? I think that was it.
Can I add one thing since Amy brought up a really good point on the regulation side? There's actually something I do feel really strongly about on the regulatory front. This is I think one of the most important things that can happen for financial inclusion on a regulatory front is tiered KYC, right? We need to see step-based, risk-based KYC, and this is very important for communities that are migratory, that are in forced migration situations or whatever it may be. Identifying people when they're in transit is hard to do, especially when you're coming from a community that doesn't have a very solid identification system to begin with. So I would love to see more countries moving towards tiered KYC that would allow small amounts of transactions to go forward with a lower identity level. It's just good. It's good for the world.
Thank you very much for your answers. Now, actually, I do have 3 more questions on my list, but I will ask you to refrain from putting those questions to our speakers as we are running behind schedule. I hope that that's acceptable for you, with my excuses for you not being able to ask the question. We are running behind the schedule that I was given, and I would, with this, like to actually thank our panelists very much for this extremely interesting hands-on and operational presentations of where we are going. And you are truly working with some pioneering, I think, we can conclude. And you have put to us the future ideas and necessities to build on. And I think that that's very important and interesting for us, although I must say that I will, and I think it goes for many people in this room, will not be able to really understand what you are doing. But I think it's an extremely important vehicle for us who are working with the policy making and, making migration work better for development. And actually, thank you very much for making me feel that I'm not such a nincompoop, because I have never used the password. Thank you very much. Join me in a round of applause.
That is the most interesting session, the precious session, as Dilip put it. So we have 5 minutes. 5 minutes. 5 minutes. Grab your coffee and come back, and we start the session. Okay? Thank you very much. Amy, thank you very much.
Chinese team, so they're not
in like midterm. Really great to meet you.
So, are we having more Korean food tonight? Should we go somewhere else? No, are you right? No. You want to get together later? Yeah, no, it's fine. Yeah, whenever. It doesn't have to be early. Oh, just put down whatever you think is suitable. Whatever. Presumably I don't have to do it. I don't feel like it. Yeah, put me down for it, whatever you think is suitable, and then we'll cross that bridge when we come to it. Where's the plug, by the way? Is there a plug anywhere? Is there a plug? Is there one somewhere else? Where's that? Where's the plug? Oh, you're doing it. What can I do? And what time were you sitting today? 6 p.m. today then? Yeah. 6 o'clock. 5 hours. No, about 4. I'll leave you to it then. Okay, so you'll be, you're at Millennium Plaza. Yeah. I've got to go to another, ridiculous, I've got to check into another hotel for one night, and then I come back again. Well, it's a few blocks away, but I mean, I can go back, I can live here.
Good afternoon. Good afternoon. Hello. Good afternoon. Well, welcome to the last but one session, but the priciest session in the conference. I can explain a bit what I mean by that. We talked about dollars and cents, and we talked about remittances, and now we are going to talk about actually the final component of the global remittances agenda, which talks about big money, how remittances can be leveraged, how diasporas can be leveraged for accessing international capital markets. And we are now not talking about smaller amounts of retail transactions. We are talking about actually really big bond issuance and big money. And I am quite aware of the delay in our schedule. So I was going to crack a few jokes to wake you up, but I won't. You laughed anyways, which is good. Let me welcome to this session focused on mobilizing diaspora savings, diaspora philanthropy, leveraging remittances for bond financing, and on sovereign ratings. Let me welcome to this session our two eminent speakers, Governor Jwala Rambaran and Dr. Joydeep Mukherjee. Governor Rambaran is heading the Central Bank of Trinidad and Tobago, and he also heads the Deposit Insurance Corporation, as well as he's a member of the Board of Governors of the Heritage and the Stabilization Fund. And he would talk about diaspora bonds that he is implementing right now as a pilot in the Caribbean region. And after that, I would request Joydeep Mukherjee to talk about the contribution of remittances to sovereign credit ratings and related themes of even perhaps touch on any other topics like securitization, future flow securitization, if you had a bit of time. Joydeep Mukherjee is a Senior Director and Analytical Manager at Standard & Poor's. And I have come to know him for a while now. He also has a lot of interest and very interesting comparative work on China and India. But of course, he is also I think you are still managing the Latin America credit rating portfolio for Standard & Poor's. And as you know, what he says sometimes, depending on which side of the bed he wakes up, has some impact on the bond markets in that part of the world. So with much further ado, let me welcome Governor Rambaran.
Thanks very much, Dilip. And first, let me thank the World Bank and the Global Migration Group, especially Dilip and Sonia, for the kind invitation to attend this conference. I've been asked to speak on the topic how the diaspora contributions can actually help finance sustainable development in the Caribbean. And this is, of course, a very timely and topical issue, because a key challenge for Caribbean countries that are mainly small island developing states, and they're essentially middle-income states, is how to mobilize the vast amount of financing that's required to fund the post-2015 development framework. And while there is no single or precise estimate, it is clear that the sums that the Caribbean countries would require to fund their sustainable development far exceed the traditional sources of development financing. So a major question for us in the Caribbean region is, where will the money come from? And in that respect, we say, well, let's look at where the money has actually come from in the past to fund the Caribbean development. And there are essentially three sources or flows. What we've seen over the last 2 decades is that the region has faced a variety of shocks. First is the shock arising from lower aid flows, the erosion of preferential trade arrangements for sugar and bananas, and interventions related to money laundering and combating the financing of terrorism, as well as the global financial crisis. Despite these varying shocks, the region has seen total external resource flows increase over the last 15 years or so. But there's been a dramatic shift in the composition of financing and a skewed distribution of this financing to a few countries. When we look at aid, what we've seen is a reordering of the aid priorities of aid donors away from the Caribbean towards sub-Saharan Africa, and Eastern Europe has led to a sharp decline in ODA, from just over 4% of GDP in 1990 to around 2% of GDP in 2013. At the same time, we've also seen the emergence of some non-traditional aid donors such as China and Venezuela. And this has contributed to some stabilization of ODA resources to the Caribbean. And it bodes well going forward into the future. But again, the sums are not sufficient. Foreign direct investment, which is usually considered a more stable source of private capital, grew rapidly in the Caribbean, especially during the last decade. But again, FDI is highly concentrated by country and by sector. Close to half of the FDI flows in the Caribbean have gone to only 2 countries, Trinidad and Tobago and Jamaica. And again, these flows have been heavily concentrated in the hydrocarbon industries of mining and energy. So faced with this compression of aid resources and a concentration of foreign direct investment, regional governments have resorted to costly private debt flows to close their external financing gaps. As a result, what we've seen in the Caribbean is that the debt burdens have risen rapidly over the last decade and are now at unsustainable levels, especially in the Eastern Caribbean. The Caribbean is now home to some of the most highly indebted emerging market countries. And to give you a sense of what that looks like, we have 6 countries in the Caribbean whose public debt to GDP ratios range between 50 to 90% of GDP. And that signals, of course, heightened debt vulnerabilities. Those countries are the Bahamas, Belize, Dominica, Guyana, St. Lucia, and St. Vincent and the Grenadines. And if that was not bad, we now have 5 countries in the Caribbean whose public debt to GDP is beyond 90%, signaling significant debt distress. Those countries are Antigua and Barbuda, Barbados, Grenada, Jamaica, and St. Kitts and Nevis. Of course, Jamaica is the highest at 145% of GDP. So the bright spot, remittances, which have become an important and growing source of non-traditional external financing for many Caribbean countries. Now, yesterday there was this discussion that remittances should not be a substitute for external financial flows. The harsh reality, they are a substitute. And what we've seen is that remittances in the Caribbean have now surmounted and surpassed FDI and order flows. At 6% of the region's GDP, they are a tremendous source of external financing. And for some countries, they are a lifeline. Haiti, 21% of GDP. Jamaica, 15%. And Guyana, 11% of GDP. So it is clear that remittances are a major substitute for external finance in the Caribbean. So given these trends in external resource flows, it means that Caribbean countries must explore innovative sources of financing. So again, where will the money come from? Well, one source is the Caribbean's large, highly educated diaspora. Our estimates show we have 4 million persons who could be counted in our diaspora, or the equivalent of about 25% of the region's population. And the annual savings of the diaspora is placed at about 20 billion in 2013, or about a quarter of the region's GDP. Those diaspora savings are highest for the following 5 countries. Guyana, 77% of GDP. Haiti, 56% of GDP. Jamaica, 42% of GDP. Suriname, 22% of GDP. And Trinidad and Tobago, 7% of GDP. Most of these savings, of course, are invested in the host countries of the diaspora, especially the United States, Canada, the United Kingdom, and in the case of Suriname, the Netherlands. And therefore, Caribbean governments can potentially tap into these substantial sources by issuing diaspora bonds. And in doing so, we would need to look at the experiences of at least 10 other countries that have issued what we call diaspora bonds or near diaspora bonds over the last few years. So what's the advantages of issuing a diaspora bond for a Caribbean country? One, the demand for the bonds are likely to prevail not only in good times, but also in bad times. Of course, we see patriotism as a compelling but not sufficient reason to purchase these bonds. And a diaspora investor might be willing to buy a diaspora bond at a much lower interest rate than the rate demanded by foreign investors, especially given the level of external borrowing that has taken place in the Caribbean market. And that means they might be able to attract a patriotic discount. At the same time, a diaspora bond can help support a country's credit rating. And I'm actually sitting next to the person who decides my country's credit rating, so I need to be very careful about what I'm saying here. And finally, diaspora investors can gain satisfaction from contributing to the economic development of their country of origin, especially if the diaspora bond is used to finance specific projects in which the diaspora community has a special interest. There are about 5 Caribbean countries that appear well suited to issue a diaspora bond, but I want to use the interesting case of Suriname, which we found from our research, to highlight the feasibility of issuing a diaspora bond in a country like that. And you'll see why. Suriname is the smallest country in South America. It's an upper middle income country and is now coming out of a period of instability. But here's the strange thing. When Suriname gained independence in 1975, the Dutch agreed to a large transfer, continuous large transfer of aid flows to Suriname, and that was known as the Dutch treaty money. Some of those treaty funds were usually frozen at different points in time in the intervening period because of political developments. And in 2010, the Dutch treaty money came to an end. So therefore, Suriname has to find a sustainable source of external financing to fund its SDGs going forward, whether it's from revenue mobilization, whether it's external borrowing, whether it's coming from the development partners. When we look at Suriname, what we find is that Suriname has a large, easily identifiable diaspora community in the Netherlands of around 190,000 persons, equivalent to 40% of Suriname's population. The annual savings of the Surinamese diaspora in the Netherlands is significant relative to Suriname's economy and its external financing requirements. At $1 billion US in 2013, the annual savings of the Surinamese diaspora in the Netherlands is close to 1/5 of Suriname's GDP, and it could finance 5.5 times Suriname's external current account deficit. And that $1 billion compares to the $1.7 billion of treaty money that would typically come to the Surinamese economy under the previous agreement. So there's a strong case for a country like Suriname to look at the possibility of structuring a diaspora bond to target its diaspora in the Netherlands. Of course, in doing that, we need to take into account the lessons from other countries that have looked to issue diaspora bonds or near bonds. And lessons such as you need to issue this diaspora bond in normal, not crisis times, if you really want to attract diasporic interest. Second, you have to engage with the diaspora from the beginning if you want your bond issue to be successful. And this means extensive engagement with the embassies that you have wherever that diaspora is located. Third, you need to look at how you structure that diaspora bond in terms of what is the minimum level that you would issue into the market for the first time, what would be a competitive interest rate, what would be issues such as what projects the diaspora bond would be financing. Would it finance one large project that may be subject to political questions, or would it subject a diversified basket of infrastructure and sectoral projects? And therefore, and the other is we need to always temper expectations about what it is the diaspora would really want in terms of the first time that we're reaching out to them in the form of this new instrument. So to conclude, when we look at the Caribbean, I want to leave you with 3 key messages. Diaspora bonds are supportive of the SDGs. They offer Caribbean governments a more stable and affordable source of external finance. Despite the impressive size of the potential market for Caribbean diaspora bonds, no Caribbean country has yet issued a diaspora bond. And we have 5 countries that are well suited to pioneer diaspora bonds as an innovative financing solution. Thank you.
Thank you, Governor. That was just about 12 minutes and 30 seconds. A stellar performance. Thank you very much. Now let me welcome Joydeep Mukherjee to talk about remittances and credit ratings.
Thank you, Dilip, and thank you for inviting me to this conference. My own work is quite removed from the topic of your conference. I've learned quite a lot, not just here, but in doing readings and preparation for it. And it's a subject that shows up in my work when I go to countries, because most of the countries we rate have this issue, but we have never really focused on it as a subject in and of itself. We've always seen this as something that's at the side of what we're looking at. So I'll go over a little bit about credit ratings, because that's what I know, and I'll connect that to the whole issue of remittances and how remittances fits in to what we do. So the first part of the presentation is basically more of background on ratings themselves. We have to say this because we're regulated by the SEC, so anytime I do anything in public, I have to make this definition that, what is a rating and what is it not? It's opinion about capacity and willingness to pay debt. It's not an endorsement of the country or a seal of good housekeeping, the government's doing well or not doing well. It's basically their capacity and willingness to pay debt. And sometimes it's important to realize that, because life is not fair, and you have many countries which, for reasons that have nothing to do with the character of the people or their efforts, are in a difficult position, and therefore they have to work harder to get the same rating compared with some other country that's blessed with other resources. And the Caribbean is one good example. It's good to have a diversified economy. How can you diversify an economy if you're in a small island with 500,000 people? It's very easy in theory, but it's a lot easier to diversify Canada or France than it is to diversify St. Kitts and Nevis. So I say that because the rating takes into account the unfairness of life, which is that if you have a small, open economy, you're more vulnerable. So you may have a very strong willingness to pay the debt, but your capacity could be weakened, unless, of course, through your own efforts you strengthen it. So that's just something I just wanted to say in terms of what we define as a rating. It's not a recommendation to buy or sell. So if Trinidad does issue diaspora bonds, the rating will not give you advice as to whether or not it's a good investment. Okay. Ratings play a role in giving information to the market. I mean, the only reason we exist is because most people who might want to buy a bond issued by the government of Trinidad, for example, Trinidad and Tobago, would not do much research on Trinidad and Tobago. A few investors, the large, the JP Morgans of the world, the BlackRocks and people like that, they'll have an army of people doing all the research in the world. They'll know exactly what is the value of that bond issued by the government, and they can make their own decision. But for most people, most institutions, that's not going to be possible. So there's a gap in the market because there's knowledge on one side, and there are people on the other side who want the knowledge, and it's not being shared. So there's a role for an intermediary, which is a rating agency, to come in and say, I'll do my due diligence, I will look at the country or the bank or the corporation issuing the bond, and I'll give you an opinion. And it basically tries to provide a common information basis that's independent and not biased. And so one of the things that we always say is that we are giving information to the investor. We are not acting on behalf of the country or the company issuing the bond. Because if we did, no investor would believe anything we said about our ratings. And we have a rating scale. I won't read this scale to you, but from AAA all the way down to the Ds. And Trinidad's rating actually is the second highest of all the ratings we have south of the United States. Chile is the highest. Trinidad's rating is in the A category. Most of the Caribbean, unfortunately, is rated in the speculative grade category, which is BB plus and lower. Oops. Okay. Won't go through every process, but basically, what do? We get a rating request from someone to rate their company or their sovereign or their bank. We send a team that goes to the country. We do research on the country. And part of that research is actually looking at the balance of payments and other issues where remittances come in. We come back, we have a rating committee, and we have a vote on the credit rating. The vote is one person, one vote. So we always have an odd number of people in a rating committee. The other people sitting in the rating committee are analysts who do exactly the same job. So you can't fool them because they're doing the same methodology, they're doing exactly the same thing. So you have to have a knowledgeable group of peers who will look at your data, ask you questions, and then you have a vote, and then that's the rating. And once the rating goes public, we monitor it consistently. We review it at least once a year in public, but in private we review it much more often, especially if circumstances were to change. So for example, in the case of Trinidad and Tobago, we did a review of the rating in December of last year, when the price of oil had already fallen. Subsequently, we haven't done any public reviews and said anything in public. But naturally, when the price of oil fell and stayed low this year, we've had some internal reviews of the situation in that country, as we have for many other countries as well. There's nothing special about Trinidad and Tobago. But just to give you an idea of sort of how we work and the role of the surveillance role, which is basically most of what we do, just to keep track of what's going on in the country and see if the rating is still correct or if it has to be adjusted. This chart, I think, probably is the most relevant for what I've shown you so far in terms of the discussion. This is the number of countries that have a rating. And if you go back to 1975 to 1987, the world of ratings, sovereign ratings, consisted of a handful of AAA countries, Canada, the United States, and some countries in Western Europe. At one time, even Japan was AAA, and that was it. So ratings was a sleepy business for sovereigns, at least, because about 200 countries did not have a sovereign rating. And then the world started to change in the 1990s, and you can connect this with many other types of flows. You can connect this with the explosion in cross-border lending. You can connect this with the explosion in cross-border foreign direct investment, also with the growth of migration, and hence remittances back. I mean, basically the last 20, 30 years, anything you want to show in a chart has gone up like that. And so the point here is you can see who's come into the world of ratings. We have now, I think, 128 sovereigns that are rated. And the top part, the brown-colored and the kind of yellowish color, those are very low-rated sovereigns. They're single B or double B. Most of the Caribbean islands are in that category. So you can see basically the world of sovereign ratings has been turned upside down. It is now a world of low-rated sovereigns in non-investment grade. That's the normal. That's the average. And the number of AAAs, of course, has gone down. We did our part by reducing the U.S. rating a couple of years ago to AA+. We've also reduced a few other ratings. So AAAs are not doing well. So on average, you could say the world, the rated world, is not as highly rated as it used to be, but then we're capturing more of the world population in the ratings. Now, connecting this to remittances, this is our framework for coming up with a sovereign rating. We have an 80-page document on our website which describes all of this in details and gives you all the charts and graphs and numbers that we use. But this basically tells you the overall framework. On the top left, you see institutional effectiveness and economic score. The institutional governance effectiveness is a lot of jargon for political risk. But we can't say political risk because countries will object if we say there's political risk in your country. So we use this jargon, but that's what it is. An economic score basically is a mixture of the growth rate of an economy and the nature of the economy, its wealth, its diversification, its sophistication. Those two factors, political risk and economic score, are largely qualitative. And they determine half of what the rating is, or their weight in the overall score, let's say, is 50%. Because you can see the top two come down to this green box, and on the top right you have external, fiscal, and monetary. Those are more quantitative metrics. There's some qualitative aspect to it, but all the numbers basically come down to that flexibility and performance profile, as we call it, and that's the other half. So there's often a question we get, or sometimes a criticism, to say, you guys just have a black box, you put some numbers in it, spit out some ratios, and there's your rating. No. The right-hand side is more like that. The left-hand side is all qualitative with a few numbers. And we put the two together to come up with what we call an indicative rating, which is the blue box in the middle. Because we can't be guided just by kind of a rigid methodology. There's always something different in every country. So this gives you something that's indicative of what the rating ought to be. And then from there, we do have some discretion to use, I'll just go forward. You can't read this, but this is a matrix that we use. You can see on the top there are various scores on going from bottom to from top to bottom and going from left to right. It's basically we give a numerical score on the various factors and come to this grid and see, okay, where on this grid does a rating fit? This is quite rigid, and that we use this, as it says, indicative rating level. And then we can make adjustments as warranted for any particular country. But the idea is that this gives you an anchor, because you don't want to be too loose and just allow your prejudices to determine the rating. On the other hand, you can't be too rigid and just allow the methodology to determine the rating when there's always something unique. So that's basically how we determine. That's the black box of ratings. Now, these are the factors I mentioned already that go into the rating. Now, you can see from, let's start from the second one, economic structure and growth prospects. There are various countries where the role of remittances is key for this, whether it's the flow that's coming in, the level of the flow. it could sometimes be the use of that money, whether we think it goes largely to consumption or whether it actually bolsters investment. Or you could say, since savings are fungible, you could say one way or the other, does the remittance in some way or another lead to something beyond just day-to-day consumption? And growth prospects. And that's key because there's a lot of countries, especially in Latin America and the Caribbean, not Trinidad and Tobago, but some of the other countries, where the growth rate is much more correlated to remittances than you would like to see, basically because the domestic engine of growth is so weak. So in those countries, we place a lot of emphasis on remittances, and that goes into the economic score. The third factor, the middle, external liquidity, international investment positions. Again, the one way of viewing remittances is sort of like saying, if you're a rich country, you invest abroad and you earn a return on your capital, and that comes in every year through your balance of payments to the current account. If you're a poor country, you export people and they send money. That also brings money in every year through the current account. So we look at that. How stable is this population from the country that lives abroad? How much do they send back home? Who do they send it to? Is it done through the banking system or Hawala or whichever network? Because that has an impact on liquidity measures. You may have a lot of money coming in through Hawala. The central bank's not going to have access to that, and that's not going to show up if you have to defend the currency in a fixed exchange rate. The central bank doesn't have that, but the guy in the street has all the dollars you want. So we look at different countries to see how the external liquidity feeds in. We actually look at conditions in the exporting country, because one of the things we were worried about when the U.S. economy collapsed is we thought that some people from Honduras or El Salvador would be fired. Probably most of them were here illegally. They probably wouldn't stay too long, and they might go home. And you might see a recession in Honduras and El Salvador simply because of the loss of those remittances. Luckily, that didn't happen, but that's the kind of question that we're asking. Fiscal flexibility, the fourth score, and the debt burden. So far, there's not been much correlation between remittances and this, because if the money comes in, the government rarely gets it, maybe indirectly through some value-added tax or some consumption tax, but most of the countries that get a lot of remittances don't have a good tax system, or it's not widely based, and the money that is spent at home from the remittances really doesn't do much for the fiscal side, which is kind of interesting. And monetary flexibility, here remittances would simply come in as monetary flexibility means not just inflation, but also means exchange rate. To the extent you have exchange rates that rely on remittances to maintain some stability, this is useful because other types of capital flows are much more volatile, especially private capital flows, portfolio flows are much more volatile, whereas we've seen that even after the 2009 crisis, that the flow of remittances to most countries was quite stable, and that feeds into at least some anchor for the exchange rate. Hope you can read this. This is the same World Bank data that other people have cited. I just looked at who exports remittances, because this is also important. Because if the world's largest exporter, 22.4% of remittances is the U.S., so naturally, if there's a recession in the U.S., we start looking at who else gets hurt. Just like if the price of oil goes up or down, you can kind of review different countries and say who's going to get hurt, who's going to benefit. If something happens to the U.S., or secondly, if something happens to Saudi Arabia or United Arab Emirates, you could do a pretty easy calculation of who's going to get hurt. And again, no surprise that most of the countries that export remittances are AA+ or AAA. Then you have two exceptions, Spain, which used to be much higher, and as their rating went down, their exports, their remittances also went down because those people went home, mainly to South America, and Italy, of course, also has much lower rating. But it's interesting that, according at least to the official statistics, 2/3 of the world's remittances just come from, I think, these 12 countries. So it's if you think OPEC has market power over the price of oil, in a sense, these 12 countries have market power over the flow of remittances. Now, this chart looks at the number we often see, which is remittances as a share of GDP in different countries. And, it's somewhat helpful, but we look at another ratio as well. I just put in the credit ratings of the countries that are the largest recipients of remittances. And, no surprise, most of the large recipients are poor countries, therefore they have a low rating. Perhaps something that's more interesting is if you actually get into the details, you realize how diverse are these countries, and hence how diverse our analysis has to be. I mean, there you have Lebanon at 18% of GDP in receiving remittances. And of course, if you go to Lebanon, most middle-class people have maids and chauffeurs from Sri Lanka or Bangladesh or India or somewhere else, because they also send out. So it's one of those sort of intermediate countries, much like Trinidad and Tobago, where the Guyanese send money back to Guyana, but the Trinidadians send money from New York to Trinidad. So when you're looking at a country like Lebanon, say, oh yeah, huge dependence on remittances. But then you realize it's just, businessmen in West Africa buying bonds from, issued by the government and ultimately backed up by the king of Saudi Arabia, who won't let Lebanon fall apart. So that's a very different dependence than Honduras, which is right next door, almost the same rating, and it has 17% of GDP in remittances. There, the analysis is very different. It's basically, I hope these guys keep their jobs, and I hope the U.S. construction industry does well, because if that number falls, Honduras is in trouble. Whereas in Lebanon, you're not really worried about the poor Lebanese in France refusing to send money back because they lost their job. Another interesting thing to point out is that Philippines, somewhere in the middle, has a rating of BBB. And then right at the bottom, second last, Morocco, BBB minus. Those are investment grade ratings. So there are countries which have investment grade credit ratings, which are also massive recipients of remittances. So it's not stereotypical, it's very poor, they have nothing else going. No. And that opens up an interesting possibility because, you can imagine if a country with institutional capacity of Philippines or even a Lebanon were to try to go for a diaspora bond or appeal to the diaspora in whatever way, just the institutional capacity of the country, I think, would allow it to go ahead further and meet with success than some of the other countries like, Albania or Pakistan, where the capacity would be much, much lower. In the case of Trinidad and Tobago, you're already investment grade, so it doesn't really apply to you, but it does sort of show that there's a diversity amongst the recipients. Now, this is the same kind of data, but I re-expressed it because, we prefer to analyze remittances as a share of what's called CAR, current account receipts. So as a share of GDP, it tells you something, but it doesn't really tell you very much about the external impact of remittances. And this tells you that of all the dollars coming into the country from trade and for services, anything other than financial transactions, all the current account receipts that are coming in, how much is from this one source? And there you see something very interesting. El Salvador, almost 40% of the dollars coming in the country are from remittances. And that tells you something in addition to whatever that is as a share of GDP. And the rankings are slightly different here because there are some countries which score higher on this score than they do on the other one as a share of GDP. And that basically says that they really depend more on remittances. So if you're looking at external vulnerability, these are the countries to look at. And again, you can see that it doesn't surprise you as to who is on that list. And Morocco and the Philippines are still there. Philippines, for all its investment-grade credit rating,